extent that the gross income for the taxpayer for such trade or business for such taxable year, including such qualified tips, exceeds the sum of the deductions other than the deduction allowed under this section, allocable to the trade or business in which such qualified tips are received by the individual for such taxable year. D, qualified tips. For purposes of this section, 1, in general, the term qualified tips means cash tips received by an individual in an occupation which customarily and regularly received tips on or before December 31, 2024, as provided by the Secretary. 2, exclusions. Such term shall not include any amount received by an individual unless A, such amount is paid voluntarily without any consequence in the event of non-payment, is not the subject of negotiation, and is determined by the payer. B, the trade or business in the course of which the individual receives such amount is not a specified service, trade, or business as defined in Section 199A(d)(2). And C, such other requirements as may be established by the Secretary and regulations or other guidance are satisfied. For purposes of subparagraph B, in the case of an individual receiving tips in the trade or business of performing services as an employee, such individual shall be treated as receiving tips in the course of a trade or business which is a specified service, trade, or business if the trade or business of the employer is a specified service, trade, or business. 3, cash tips. For purposes of paragraph 1, the term cash tips includes tips received from customers that are paid in cash or charged, and in the case of an employee, tips received under any tip-sharing arrangement. E, Social Security number required. 1, in general, no deduction shall be allowed under this section unless the taxpayer includes on the return of tax for the taxable year such individual's Social Security number. 2, Social Security number defined. For purposes of paragraph 1, the term Social Security number shall have the meaning given such term in Section 24H7. F, married individuals. If the taxpayer is a married individual within the meaning of Section 7703, this section shall apply only if the taxpayer and the taxpayer's spouse file a joint return for the taxable year. G, regulations. The Secretary shall prescribe such regulations or other guidance as may be necessary to prevent reclassification of income as qualified tips, including regulations or other guidance to prevent abuse of the deduction allowed by this section. H, termination. No deduction shall be allowed under this section for any taxable year beginning after December 31, 2028. B, deduction allowed to non-itemizers. Section 63B is amended by striking "and" at the end of paragraph 3, by striking the period at the end of paragraph 4 and inserting "and by adding at the end of the following new paragraph. 5, the deduction provided in Section 224. C, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of subparagraph W, by striking the period at the end of subparagraph X, and inserting "and by inserting after subparagraph X the following new subparagraph. Y, an omission of a correct Social Security number required under Section 224E relating to deduction for qualified tips. D, exclusion from qualified business income. Section 199AC4 is amended by striking "and" at the end of subparagraph B, by striking the period at the end of subparagraph C, and inserting and by adding at the end of the following new subparagraph. D, any amount with respect to which a deduction is allowable to the taxpayer under Section 224A for the taxable year. E, extension of tip credit to beauty service business. 1, in general, Section 45BB2 as amended is amended to read as follows. 2, application only to certain lines of business. In applying paragraph 1, there shall be taken into account only tips received from customers or clients in connection with the following services. A, the providing, delivering, or serving of food or beverages for consumption if the tipping of employees delivering or serving food or beverages by customers is customary. B, the providing of any of the following services to a customer or client if the tipping of employees providing such services is customary. 1, barbering and hair care. 2, nail care. 3, aesthetics. 4, body and spa treatments. 2, credit determined with respect to minimum wage in effect. Section 45BB1B is amended, A, by striking as in effect on January 1, 2007, and B, by inserting, and in the case of food or beverage establishments, as in effect on January 1, 2007, after, without regard to Section 3M of such act. F, reporting requirements. 1, returns for payments made in the course of a trade or business. A, statement furnished to Secretary. Section 6041A is amended by inserting, including a separate accounting of any such amounts reasonably designated as cash tips, and the occupation described in Section 224D1 of the person receiving such tips after such gains, profits, and income. B, statement furnished to payee. Section 6041D is amended by striking "and" at the end of paragraph 1, by striking the period at the end of paragraph 2, and inserting "and by inserting after paragraph 2 the following new paragraph. 3, in the case of compensation to non-employees, the portion of payments that have been reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips. 2, returns for payments made for services and direct sales. A, statement furnished to Secretary. Section 6041A is amended by inserting, including a separate accounting of any such amounts reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips, after amount of such payments. B, statement furnished to payee. Section 6041AE is amended by striking "and" at the end of paragraph 1, by striking the period at the end of paragraph 2 and inserting "and by inserting after paragraph 2 the following new paragraph. 3, in the case of subsection A, the portion of payments that have been reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips. 3, returns relating to third-party settlement organizations. A, statement furnished to Secretary. Section 6050WA is amended by striking "and" at the end of paragraph 1, by striking the period at the end of paragraph 2 and inserting "and by adding at the end the following new paragraph. 3, in the case of a third-party settlement organization, the portion of reportable payment transactions that have been reasonably designated by payers as cash tips and the occupation described in Section 224D1 of the person receiving such tips. B, statement furnished to payee. Section 6050WF2 is amended by inserting, including a separate accounting of any such amounts that have been reasonably designated by payers as cash tips and the occupation described in Section 224D1 of the person receiving such tips, after reportable payment transactions. 4, returns related to wages. Section 6051A is amended by striking "and" at the end of paragraph 16, by striking the period at the end of paragraph 17, and inserting "and by inserting after paragraph 17 the following new paragraph. 18, the total amount of cash tips reported by the employee under Section 6053A and the occupation described in Section 224D1, such person. G, clerical amendment. The table of sections for Part 7 of Subchapter B of Chapter 1 is amended by redesignating the item relating to Section 224 as relating to Section 225, and by inserting after the item relating to Section 223 the following new item. Section 224, qualified tips. H, published list of occupations traditionally receiving tips. Not later than 90 days after the date of the enactment of this Act, the Secretary of the Treasury or the Secretary's delegate shall publish a list of occupations which customarily and regularly received tips on or before December 31, 2024 for purposes of Section 224D1 of the Internal Revenue Code of 1986 as added by subsection A. 1, withholding. The Secretary of the Treasury or the Secretary's delegate shall modify the procedures prescribed under Section 3402A of the Internal Revenue Code of 1986 for taxable years beginning after December 31, 2025, to take into account the deduction allowed under Section 224 of such code as added by this Act. J, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2024. K, transition rule. In the case of any cash tips required to be reported for periods before January 1, 2026, persons required to file returns or statements under Section 6041A, 6041D3, 6041AA, 6041AE3, 6050WA, or 6050WF2 of the Internal Revenue Code of 1986, as amended by this section, may approximate a separate accounting of amounts designated as cash tips by any reasonable method specified by the Secretary. Section 70202, no tax on overtime. A, deductions allowed. Part 7 of Subchapter B of Chapter 1, as amended by the preceding provisions of this Act, is amended by redesignating Section 225 as Section 226 and by inserting after Section 224 the following new section. Section 225, qualified overtime compensation. A, in general, there shall be allowed as a deduction an amount equal to the qualified overtime compensation received during the taxable year and included on statements furnished to the individual pursuant to Section 6041D4 or 6051A19. B, limitation. 1, in general, the amount allowed as a deduction under this section for any taxable year shall not exceed $12,500, $25,000 in the case of a joint return. 2, limitation based on adjusted gross income. A, in general, the amount allowable as a deduction under subsection A after application of paragraph 1 shall be reduced, but not below zero, by $100 for each $1,000 by which the taxpayer's modified adjusted gross income exceeds $150,000, $300,000 in the case of a joint return. B, modified adjusted gross income. For purposes of this paragraph, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from gross income under Section 911, 931, or 933. C, qualified overtime compensation. 1, in general, for purposes of this section, the term qualified overtime compensation means overtime compensation paid to an individual required under Section 7 of the Fair Labor Standards Act of 1938 that is in excess of the regular rate as used in such section at which such individual is employed. 2, exclusions. Such term shall not include any qualified tip as defined in Section 224D. D, Social Security number required. 1, in general, no deduction shall be allowed under this section unless the taxpayer includes on the return of tax for the taxable year such individual's Social Security number. 2, Social Security number defined. For purposes of paragraph 1, the term Social Security number shall have the meaning given such term in Section 24H7. E, married individuals. If the taxpayer is a married individual within the meaning of Section 7703, this section shall apply only if the taxpayer and the taxpayer's spouse file a joint return for the taxable year. F, regulations. The Secretary shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this section, including regulations or other guidance to prevent abuse of the deduction allowed by this section. G, termination. No deduction shall be allowed under this section for any taxable year beginning after December 31, 2028. B, deduction allowed to non-itemizers. Section 63B, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of paragraph 4, by striking the period at the end of paragraph 5 and inserting and by adding at the end a following new paragraph. 6, the deduction provided in Section 225. C, reporting. 1, requirement to include overtime compensation on W-2. Section 6051A, as amended by the preceding provision of this Act, is amended by striking "and" at the end of paragraph 17, by striking the period at the end of paragraph 18 and inserting and by inserting after paragraph 18 the following new paragraph. 19, the total amount of qualified overtime compensation as defined in Section 225C. 2, payments to persons not treated as employees under tax laws. A, statement furnished to Secretary. Section 6041A, as amended by Section 70201E1A, is amended by inserting and a separate accounting of any amount of qualified overtime compensation as defined in Section 225C after occupation of the person receiving such tips. B, statement furnished to payee. Section 6041D, as amended by Section 70201E1B, is amended by striking "and" at the end of paragraph 2, by striking the period at the end of paragraph 3 and inserting and by inserting after paragraph 3 the following new paragraph. 4, the portion of payments that are qualified overtime compensation as defined in Section 225C. Omission of correct D, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of subparagraph X, by striking the period at the end of subparagraph Y, and inserting "and by inserting after subparagraph Y the following new subparagraph. Z, an omission of a correct Social Security number required under Section 225D relating to deduction for qualified overtime. E, clerical amendment. The table of sections for Part 7 of Subchapter B of Chapter 1, as amended by the preceding provisions of this Act, is amended by redesignating the item relating to Section 225 as an item relating to Section 226, and by inserting after the item relating to Section 224 the following new item. Section 225, qualified overtime compensation. F, withholding. The Secretary of the Treasury or the Secretary's delegate shall modify the procedures prescribed under Section 3402A of the Internal Revenue Code of 1986 for taxable years beginning after December 31st, 2025, to take into account the deduction allowed under Section 225 of such code as added by this Act. G, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2024. H, transition rule. In the case of qualified overtime compensation required to be reported for periods before January 1, 2026, persons required to file returns or statements under Section 6051A19, 6041A, or 6041D4 of the Internal Revenue Code of 1986, as amended by this section, may approximate a separate accounting of amounts designated as qualified overtime compensation by any reasonable method specified by the Secretary. Section 70203, no tax on car loan interest. A, in general, Section 163H is amended by redesignating paragraph 4 as paragraph 5 and by inserting after paragraph 3 the following new paragraph. 4, special rules for taxable years 2025 through 2028 relating to qualified passenger vehicle loan interest. A, in general, in the case of taxable years beginning after December 31, 2024 and before January 1, 2029, for purposes of this subsection, the term personal interest shall not include qualified passenger vehicle loan interest. B, qualified passenger vehicle loan interest defined. 1, in general, for purposes of this paragraph, the term qualified passenger vehicle loan interest means any interest which is paid or accrued during the taxable year on indebtedness incurred by the taxpayer after December 31, 2024 for the purchase of and that is secured by a first lien on an applicable passenger vehicle for personal use. 2, exceptions. Such term shall not include any amount paid or incurred on any of the following. 1, a loan to finance fleet sales. 2, a loan incurred for the purchase of a commercial vehicle that is not used for personal purposes. 3, any lease financing. 4, a loan to finance the purchase of a vehicle with a salvage title. 5, a loan to finance the purchase of a vehicle intended to be used for scrap or parts. 3, VIN requirement. Interest shall not be treated as qualified passenger vehicle loan interest under this paragraph unless the taxpayer includes the vehicle identification number of the applicable passenger vehicle described in Clause 1 of the return of tax for the taxable year. C, limitations. 1, dollar amount. The amount of interest taken into account by a taxpayer under subparagraph B for any taxable year shall not exceed $10,000. 2, limitation based on modified adjusted gross income. 1, in general, the amount which is otherwise allowable as a deduction under subsection A is qualified passenger vehicle loan interest determined without regard to this clause and after the application of Clause 1 shall be reduced, but not below zero, by $200 for each $1,000 or portion thereof, by which the modified adjusted gross income of the taxpayer for the taxable year exceeds $100,000, $200,000 in the case of a joint return. 2, modified adjusted gross income. For purposes of this clause, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from gross income under Section 911, 931, or 933. D, applicable passenger vehicle. The term applicable passenger vehicle means any vehicle, 1, the original use of which commences with the taxpayer, 2, which is manufactured primarily for use on public streets, roads, and highways, not including a vehicle operated exclusively on a rail or rails. 3, which has at least 2 wheels. 4, which is a car, minivan, sport utility vehicle, pickup truck, or motorcycle. 5, which is treated as a motorcycle for purposes of Title II of the Clean Air Act. And 6, which has a gross vehicle weight rating of less than 14,000 pounds. Such term shall not include any vehicle, the final assembly of which did not occur within the United States. E, other definitions and special rules. For purposes of this paragraph, 1, final assembly. For purposes of subparagraph D, the term final assembly means the process by which a manufacturer produces a vehicle at or through the use of a plant, factory, or other place from which the vehicle is delivered to a dealer with all component parts necessary for the mechanical operation of the vehicle included with the vehicle, whether or not the component parts are permanently installed in or on the vehicle. 2, treatment of refinancing. Indebtedness described in subparagraph B shall include indebtedness that results from refinancing any indebtedness described in such subparagraph and that is secured by a first lien on the applicable passenger vehicle with respect to which the refinanced indebtedness was incurred, but only to the extent the amount of such resulting indebtedness does not exceed the amount of such refinanced indebtedness. 3, related parties. Indebtedness described in subparagraph B shall not include any indebtedness owned to a person who is related within the meaning of Section 267B or 707B1 to the taxpayer. B, deduction allowed to non-itemizers. Section 63B, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of paragraph 5, by striking the period at the end of paragraph 6, and inserting and by adding at the end the following new paragraph. 7, so much of the deduction allowed by Section 163A as is attributable to the exception under Section 163H4A. C, reporting. 1, in general, Subpart B of Part 3 of Subchapter A of Chapter 61 is amended by adding at the end the following new section.
Section 6050AA, returns relating to applicable passenger vehicle loan interest received in trade or business from individuals. A, in general, any person, 1, who is engaged in a trade or business, and 2, who, in the course of such trade or business, receives from any individual interest aggregating $600 or more for any calendar year on a specified passenger vehicle loan, shall make the return described in subsection B with respect to each individual from whom such interest was received at such time as the Secretary may provide. B, form and manner of returns. A return is described in this subsection if such return 1 is in such form as the Secretary may prescribe, and 2, contains A, the name and address of the individual from whom the interest described in subsection A2 was received, B, the amount of such interest received for the calendar year, C, the amount of outstanding principal on the specified passenger vehicle loan as of the beginning of such calendar year, D, the date of the origination of such loan, E, the year, make, model, and vehicle identification number of the applicable passenger vehicle which secures such loan, or such other description of such vehicle as the Secretary may prescribe, and F, such other information as the Secretary may prescribe. C, statements to be furnished to individuals with respect to whom information is required. Every person required to make a return under subsection A shall furnish to each individual whose name is required to be set forth in such a return a written statement shown, 1, the name, address, and phone number of the information contact of the person required to make such return, and 2, the information described in some paragraphs B, C, D, and E of subsection B2 with respect to such individual and such information as is described in subsection B2F with respect to such individual as the Secretary may provide for purposes of this subsection. The written statement required under the preceding sentence shall be furnished on or before January 31st of the year following the calendar year for which the return under subsection A was required to be made. D, definitions for purposes of this section. 1, in general terms used in this section, which are also used in paragraph 4 of sections 163H, shall have the same meaning as when used in such paragraph. 2, specified passenger vehicle loan. The term specified passenger vehicle loan means the indebtedness described in section 163H4B with respect to any applicable passenger vehicle. E, regulations. The Secretary shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this section, including regulations or other guidance to prevent the duplicate reporting of information under this section. F, applicability. No return shall be required under this section for any period to which section 163H4 does not apply to. Penalties. Section 6724D is amended. A, in paragraph 1B by striking or at the end of the clause XXVII, by striking and at the end of clause XXVIII, and inserting or and by adding at the end of the following new clause. 29, section 6050A A, relating to returns relating to applicable passenger vehicle loan interest received in trade or business from individuals, and B, in paragraph 2, by striking or at the end of subparagraph KK, by striking the period at the end of subparagraph LL, and inserting or and by inserting after subparagraph LL the following new paragraph, MM, Section 6050 AAC, relating to statements relating to applicable passenger vehicle loan interest received in trade or business from individuals. D, conforming amendments. 1, Section 56E1B is amended by striking Section 163H4 and inserting Section 163H5. 2, the table of sections for Subpart B of Part 3 of Chapter A of Chapter 61 is amended by adding at the end of the following new item, Section 6050 AA, returns relating to applicable passenger vehicle loan interest received in trade or business from individuals. E, effective date. The amendments made by this section shall apply to indebtedness incurred after December 31st, 2024. Section 70204, Trump Accounts and Contribution Pilot Program. A, Trump Accounts 1 in general, Subchapter F of Title 1 is amended by adding at the end the following new part, Part 9, Trump Accounts, Section 530A, Trump Accounts, Section 538, Trump Accounts, A, General Rule, except as provided in this section or under regulations or guidance established by the Secretary, a Trump account shall be treated for purposes of this title in the same manner as an individual retirement account under Section 408A. B, Trump account for purposes of the Section 1 in general. The term Trump account means an individual retirement account is defined in Section 408A, which is not designated as a Roth IRA and which meets the following requirements. A, the account, I, is created or organized by the Secretary for the exclusive benefit of an eligible individual or such eligible individual's beneficiaries, or 2, is 1, created or organized in the United States for the exclusive benefit of an individual who has not attained the age of 18 before the end of the calendar year or such individual's beneficiaries, and 2, funded by a qualified rollover contribution. B, the amount is designated in such manner as the Secretary shall prescribe at the time of the establishment of the account as a Trump account. C, the written governing instrument creating the account meets the following requirements. 1, no contribution will be accepted, 1, before the date that is 12 months after the date of the enactment of this section, or 2, in the case of a contribution made in any calendar year before the calendar year in which the account beneficiary attains age 18, if such contribution would result in aggregate contributions other than exempt contributions for such calendar year in excess of the contribution limit specified in subsection C2A. 2, except as provided in subsection D, no distribution will be allowed before the first day of the calendar year in which the account beneficiary attains age 18. 3, no part of the account funds will be invested in any asset other than an eligible investment during any period before the first day of the calendar year in which the account beneficiary attains age 18. 2, eligible individual. The term eligible individual means any individual, A, who has not attained the age of 18 before the close of the calendar year in which the election under subparagraph C is made. B, for whom a Social Security number within the meaning of Section 24H7 has been issued before the date on which an election under subsection C is made. And C, for whom, 1, an election is made under the subparagraph by the Secretary if the Secretary determines, based on information available to the Secretary from tax returns or otherwise, that such individual meets the requirements of subparagraphs A and B, and no prior election has been made for such individual under Clause 2, or 2, an election is made under this subparagraph by a person other than the Secretary at such time in such a manner as the Secretary may prescribe for the establishment of the Trump account if no prior election has been made for such individual under Clause 1. 3, eligible investment. A, in general, the term eligible investment means any mutual fund or exchange-traded fund which, 1, tracks the returns of a qualified index, 2, does not use leverage, 3, does not have annual fees and expenses of more than 0.1% of the balance of the investment in the fund, and 4, meets such other criteria as the Secretary determines appropriate for purposes of the Section B qualified index. The term qualified index means 1, the Standard & Poor's 500 stock market index, or 2, any other index. 1, which is comprised of equity investments in United States companies, and 2, for which regulated futures contracts as defined in Section 1256 G1 are traded on a qualified board or exchange as defined in Section 1256 G7. Such terms shall not include any industry or sector-specific index, but may include an index based on market capitalization. 4, account beneficiary. The term account beneficiary means the individual on whose behalf the Trump account was established. C, treatment of contributions. 1, no deduction allowed. No deduction shall be allowed under Section 219 for any contribution which is made before the first day of the calendar year in which the account beneficiary attains age 18. 2, contribution limit. In the case of any contribution made before the calendar year in which the account beneficiary attains age 18. A, in general, the aggregate amount of contributions other than exempt contributions for such calendar year shall not exceed $5,000. B, exempt contribution. For purposes of this paragraph, the term exempt contribution means 1, qualified rollover contribution, 2, any qualified general contribution, or 3, any contribution provided under Section 6434. C, cost of living adjustment. 1, in general, in the case of any calendar year after 2027, the $5,000 amount under subparagraph A shall be increased by an amount equal to 1, such dollar amount multiplied by 2, the cost of living adjustment determined under section 1F3 for the calendar year determined by substituting calendar year 2026 for calendar year 2016 in subparagraph A2 thereof. 2, rounding, if any increase under this subparagraph is not a multiple of 100, such amount shall be rounded to the next lower multiple of 100. 3, timing of contributions. Section 219F3 shall not apply to any contribution made to a Trump account for any taxable year ending before the calendar year in which the account beneficiary attains age 18. D, distributions. 1, in general, except as otherwise provided in the subsection, no distribution shall be allowed before the first day of the calendar year in which the account beneficiary attains age 18. 2, tax treatment of allowable distributions. For purposes of applying Section 72 to any amount distributed from a Trump account, the investment in the contract shall not include A, any qualified general contribution, B, any contribution provided under Section 6434, and C, the amount of any contribution which is excluded from the gross income under Section 128. 3, qualified rollover contributions. Paragraph 1 shall not apply to any distribution which is a qualified rollover contribution, and the amount of such distribution shall not be included in the gross income of the beneficiary. 4, qualified able rollover contributions. A, in general, paragraph 1 shall not apply to any distribution which is a qualified able rollover contribution, and the amount of such distribution shall not be included in the gross income of the beneficiary. B, qualified able rollover contribution. For purposes of this section, the term qualified able rollover contribution means an amount which is paid during the calendar year in which the account beneficiary attains age 17 in a direct trustee-to-trustee transfer from a Trump account maintained for the benefit of the account beneficiary to an able account as defined in Section 529 AE6 for the benefit of such account beneficiary, but only if the amount of such payment is equal to the entire balance of the Trump account from which the payment is made. 5, distributions of excess contributions. In the case of any contribution which is made before the calendar year in which the account beneficiary attains age 18 and which is in excess of the limitation in effect under subsection C2A for the calendar year. A, paragraph 1 shall not apply to the distribution of such excess. B, the amount of such distribution shall not be included in gross income of the account beneficiary. And C, the tax imposed by this chapter on the distributee for the taxable year in which the distribution is made shall be increased by 100% of the amount of net income attributable to such excess determined without regard to subparagraph B. 6, treatment of death of account beneficiary. If, by reason of the death of the account beneficiary before the first day of the calendar year in which the account beneficiary attains age 18, any person acquires the account beneficiary's interest in the Trump account, A, paragraph 1 shall not apply. B, such account shall cease to be a Trump account as of the date of death. And C, an amount equal to the fair market value of the assets reduced by the investment in the contract in such account on such date shall, 1, if such person is not the estate of such beneficiary, be includable in such person's gross income for the taxable year, which includes such date, or 2, if such person is the estate of such beneficiary, be includable in such beneficiary's gross income for the last taxable year of such beneficiary. E, qualified rollover contribution. For purposes of this section, the term qualified rollover contribution means an amount which is paid in a direct trustee-to-trustee transfer from a Trump account maintained for the benefit of the account beneficiary to a Trump account maintained for such beneficiary, but only if the amount of such payment is equal to the entire balance of the Trump account from which the payment is made. F, qualified general contribution. For purposes of this section, 1, in general, the term qualified general contribution means any contribution which A, is made by the Secretary pursuant to a general funding contribution, B, is made to the Trump account of an account beneficiary in the qualified class of account beneficiary specified in the general funding contribution, and C, is in an amount which is equal to the ratio of 1, the amount of such general funding contribution to 2, the number of account beneficiaries in such qualified class. 2, general funding contribution. The term general funding contribution means a contribution which A, is made by 1, an entity described in section 170C1 other than a possession of the United States or a political subdivision thereof or an Indian tribal government, or 2, an organization described in section 501C3 and exempt from tax under section 501A, and B, which specifies a qualified class of account beneficiaries to whom such contribution is to be distributed. 3, qualified class. A, in general, the term qualified class means any of the following. 1, all account beneficiaries who have not attained the age of 18 before the close of the calendar year in which the contribution is made. 2, all account beneficiaries who have not attained the age of 18 before the close of the calendar year in which the contribution is made and who reside in one or more states or other qualified geographic areas specified by the terms of the general funding contribution. 3, all account beneficiaries who have not attained the age of 18 before the close of the calendar year in which the contribution is made and who were born in one or more calendar years specified by the terms of the general funding contribution. B, qualified geographic area. The term qualified geographic area means any geographic area in which not less than 5,000 account beneficiaries reside and which is designated by the Secretary as a qualified geographic area under the subparagraph. G, trustee selection. In the case of any Trump account created or organized by the Secretary shall take into account the following criteria in selecting the trustee. 1, the history of reliability and regulatory compliance of the trustee. 2, the customer service experience of the trustee. 3, the costs imposed by the trustee on the account or the account beneficiary. H, other special rules in coordination with individual retirement account rules. 1, in general, the rules of subsections K and P of Section 408 shall not apply to a Trump account, and the rules of subsections D and I of Section 408 shall not apply to a Trump account for any taxable year beginning before the calendar year in which the account beneficiary attains age 18. 2, custodial accounts. In the case of a Trump account, Section 408H shall be applied by substituting a Trump account described in Section 530AB1 for an individual retirement account described in subsection A. 3, contributions. In the case of any taxable year beginning before the first day of the calendar year in which the account beneficiary attains age 18, contribution to a Trump account shall not be taken into account in applying any contribution limit to any individual retirement plan other than a Trump account. 4, distributions. Section 408D2 shall be applied separately with respect to Trump accounts and other individual retirement plans. 5, excess contributions for purposes of applying Section 4973B to a Trump account for any taxable year beginning before the first day of the calendar year in which the account beneficiary attains age 18. The term excess contributions means the sum of A, the amount by which the amount contributed to the account for the calendar year in which taxable year begins exceeds the amount permitted to be contributed to the account under subsection C2, and B, the amount determined under this paragraph for the preceding taxable year. For purposes of this paragraph, the excess contributions for a taxable year are reduced by the distributions to which subsection D5 applies that are made during the taxable year by the date prescribed by law, including extensions of time for filing the account beneficiary's return for the taxable year. 1, reports. 1, in general, the trustee of a Trump account shall make such reports regarding such account to the Secretary and to the beneficiary of the account at such time and in such a manner that as may be required by the Secretary. Such reports shall include information with respect to A, contributions including the amount and source of any contribution in excess of $25 made from a person other than the Secretary, the account beneficiary, or the parent or legal guardian of the account beneficiary. B, distributions including distributions which are qualified rollover contributions. C, the fair market value of the account. D, the investment in the contract with respect to such account. And E, such other matters as the Secretary may require. 2, qualified rollover contributions not later than 30 days after the date of any qualified rollover contribution. The trustee of the Trump account to which the contribution was made shall make a report to the Secretary. Such report shall include A, the name, address, and social security number of the account beneficiary. B, the name and address of such trustee. C, the account number. D, the routing number of the trustee. And E, such other information as the Secretary may require. 3, period of reporting. This subsection shall not apply to any period after the calendar year in which the beneficiary attains age 17. 2, qualified able rollover contributions exempt from able contribution limitation. A, in general, Section 529A(b)(2)(b) is amended by inserting or received in a qualified able rollover contribution described in Section 530A(d)(4)(b) after except as provided in the case of contributions under subsection C1C. B, prohibition on excess contributions. The second sentence of Section 529A(b)(6) is amended by inserting but do not include any contributions received in a qualified able rollover contribution described in Section 530A(d)(4)(b) before the period at the end. C, conforming amendment. Section 4973H1 is amended by inserting or contributions received in a qualified able rollover contribution described in Section 530A(d)(4)(b) after other than contributions under Section 529AC1C. 3, failure to provide reports on Trump accounts. Section 6693A2 is amended by striking and at the end of subparagraph E, by striking the period at the end of subparagraph F and inserting and by inserting after subparagraph F the following new subparagraph G. Section 530A1 relating to Trump accounts. 4, clerical amendment. A, the table of parts for subchapter F of Chapter 1 is amended by adding at the end the following new item. Part 9, Trump accounts. B, employer contributions. 1, in general. Part 3 of subchapter B of Chapter 1 is amended by inserting after Section 127 the following new section. Section 128, employer contributions to Trump accounts. A, in general. Gross income of an employee does not include amounts paid by the employer as a contribution to the Trump account of such employee or of any dependent of such employee if the amounts are paid or incurred pursuant to a program which is described in subsection C. B, limitation. 1, in general, the amount which may be excluded under subsection A with respect to any employee shall not exceed $2,500. 2, inflation adjustment. A, In general, in the case of any taxable year beginning after 2027, the $2,500 amount in paragraph 1 shall be increased by an amount equal to 1, such dollar amount multiplied by 2, the cost of living adjustment determined under Section 1F3 for such calendar year by substituting calendar year 2026 for calendar year 2016 in subparagraph A2 thereof. B, rounding, if any increase determined under subparagraph A is not a multiple of $100, such increase shall be rounded to the nearest multiple of $100. C, Trump account contribution program. For purposes of this section, a Trump account contribution program is a separate written plan of an employer for the exclusive benefit of his employees to provide contributions to the Trump accounts of such employees or dependents of such employees, which meets requirements similar to the requirements of paragraphs 2, 3, 6, 7, and 8 of Section 129D. 2, clerical amendment. The table of sections for Part 3 of Subchapter B of Chapter 1 is amended by inserting after the item relating to Section 127 the following new item. Section 128, employer contributions to Trump accounts. C, certain contributions excluded from gross income. 1, in general, Part 3 of Subchapter B of Chapter 1 is amended by inserting before Section 140 the following new item. Section 139J, certain contributions to Trump accounts. A, in general, gross income of an account beneficiary shall not include any qualified general contribution to a Trump account of the account beneficiary. B, definitions. Any term used in this section which is used in Section 530A shall have the meaning given to such term under Section 530A. 2, clerical amendment. The table of sections for Part 3 of Subchapter B is amended by inserting before the item relating to Section 140 the following new item. Section 139J, certain contributions to Trump accounts. D, Trump accounts contribution pilot program. 1, in general, Subchapter B of Chapter 65 is amended by adding at the end the following new section. Section 6434, Trump accounts contribution pilot program. A, in general, in the case of an individual who makes an election under this section with respect to an eligible child of the individual, such eligible child shall be treated as making a payment against the tax imposed by subtitle A for the taxable year for which the election was made in an amount equal to $1,000. B, refund of payment. The amount treated as a payment under subsection A shall be paid by the Secretary to the Trump account with respect to which such eligible child is the account beneficiary. C, eligible child. For purposes of this section, the term eligible child means qualifying child as defined in Section 152C. 1, who was born after December 31st, 2024, and before January 1st, 2029. 2, with respect to whom no prior election has been made under this section by such individual or any other individual. 3, who is a United States citizen, and 4, at least one parent of whom was a United States citizen at the time of such qualifying child's birth. D, election. An election under this section shall be made at such time and in such manner as the Secretary shall provide. E, social security number required. 1, in general, this section shall not apply to any taxpayer unless such individual includes with the election made under this section A, such individual's social security number, and B, the social security number of the eligible child with respect to whom the election is made. 2, social security number defined. For purposes of paragraph 1, the term social security number shall have the meaning given such terms in Section 24H7 determined by substituting before the date of the election made under Section 6434 for before the due date of such return in subparagraph B thereof. F, exception from reduction or offset. Any payment made to any individual under this section shall not be 1, subject to reduction or offset pursuant to subsection C, D, E, or F of Section 6402 for any similar authority permitting offset, or 2, reduced or offset by other assessed federal taxes that would otherwise be subject to levy or collection. G, special rule regarding interest. The period determined under Section 6611. A, with respect to any payment under this section shall not begin before January 1st, 2028. H, mirror code possessions. In the case of any possession of the United States with a mirror code tax system as defined in Section 24K, this section shall not be treated as part of the income tax laws of the United States for purposes of determining the income tax law of such possession unless such possession elects to have this section be so treated. 1, definitions. For purposes of this section, the term Trump account and account beneficiary have the meaning given such terms in Section 530AB. 2, penalty for negligent claim or fraudulent claim. Part 1 of Subchapter A of Chapter 68 is amended by adding at the following new section. Section 6659, improper claim for Trump account contribution pilot program credit. A, in general. In the case of any individual who makes an election under Section 6434 with respect to an individual who is not an eligible child of the taxpayer. 1, if such election was made due to negligence or disregard of the rules or regulations, there shall be imposed a penalty of $500. Or 2, if such election was made to fraud, there shall be imposed a penalty of $1,000. B, definitions. 1, eligible child. The term eligible child has the meaning given such term under Section 6434. 2, negligence, disregard. The term negligence and disregard have the same meaning as when such terms are used in Section 6662. 3, omission of correct social security number treated as mathematical or clerical error. Section 6213G2, as amended by the preceding provisions of this Act, is amended by striking and at the end of subparagraph Y, by striking the period at the end of subparagraph Z, and inserting and by inserting after subparagraph Z, the following new paragraph, AA, an omission of a correct Social Security number required under Section 6434E1 relating to the Trump Accounts Contribution Pilot Program for confirming amendments. A, the table of sections for subchapter B of Chapter 65 is amended by adding at the end of the following new item, Section 6434, Trump Accounts Contribution Pilot Program. B, the table of sections for Part 1 of subchapter A of Chapter 68 is amended by inserting after the item relating to Section 6658 the following new item, Section 6659, improper claim for Trump Account Contribution Pilot Program credit. E, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. F, funding. In addition to amounts otherwise available, there is appropriated to the Department of Treasury out of any money in the Treasury not otherwise appropriated $410 million to remain available until September 30th, 2034 to carry out the amendments made by this section. Chapter 3, establishing certainty and competitiveness for American job creators. Subchapter A, permanent U.S. business tax reform and boosting domestic investment. Section 70301, full expensing for certain business property. A, made permanent. 1, in general. Section 168K2A is amended by adding and at the end of Clause 1 and striking and at the end of Clause 2 and inserting a period and by striking Clause 3. 2, property with longer production periods. Section 168K2B is amended A in Clause 1 by striking subclauses 2 and 3 and redesignating subclauses 4, 5, and 6 as subclauses 2, 3, and 4, respectively, and B by striking Clause 2 and redesignating clauses 3 and 4 as clauses 2 and 3, respectively. 3, self-constructed property. Section 168K2E is amended by striking Clause 1 and redesignating clauses 2 and 3 as clauses 1 and 2, respectively. 4, certain plants. Section 168K5A is amended by striking planted before January 1st, 2027, or is grafted before such date to a plant that has already been planted in the matter preceding Clause 1 and inserting planted or grafted. 5, conforming amendments. A, Section 168K2A2 is amended by striking Clause 2 of subparagraph E and inserting Clause 1 of subparagraph E. B, Section 168K2C1 is amended by striking and subclauses 2 and 3 of subparagraph B1. C, Section 168K2C2 is amended by striking subparagraph B3 and inserting subparagraph B2. D, Section 460C6B is amended by striking which and all that follows through the period and inserting which has a recovery period of 7 years or less. B, 100% expensing. 1, in general, Section 168K is amended A in paragraph 1A by striking the applicable percentage and inserting 100%, and B by striking paragraph 6 and 8. 2, certain plants. Section 168K5A1 is amended by striking the applicable percentage and inserting 100%. 3, transitional election of reduced percentage. Section 168K10 is amended by striking subparagraph A and by redesignating subparagraph B as subparagraph C and by inserting before subparagraph C as so redesignated the following new subparagraphs. A, in general, in the case of qualified property placed in service by the taxpayer during the first taxable year ending after January 19, 2025, the taxpayer elects to have this paragraph apply for such taxable year. Paragraph 1A shall be applied. 1, in the case of property which is not described in Clause 2 by substituting 40% for 100%, or 2, in the case of property which is described in subparagraph B or C of paragraph 2 by substituting 60% for 100%. B, specified plants. In the case of any specified plant planted or grafted by the taxpayer during the first taxable year ending after January 19, 2025, that the taxpayer elects to have this paragraph apply for such taxable year. Paragraph 5A1 shall be applied by substituting 40% for 100%. C, effective date. 1, in general, except as otherwise provided in this subsection, the amendments made by this section shall apply to property acquired after January 19, 2025. 2, specified plants, except as provided in paragraph 3, and in the case of any specified plant, as defined in Section 168K 5B of the Internal Revenue Code of 1986, as amended by this section. The amendments made by this section shall apply to such plants which are planted or grafted after January 19, 2025. 3, transitional election of reduced percentage. The amount made by subsection B3 shall apply to taxable years ending after January 19, 2025. 4, acquisition date determination. For purposes of paragraph 1, property shall not be treated as acquired after the date on which a written binding contract is entered into for such acquisition. Section 70302, full expensing of domestic research and experimental expenditures. A, in general. Part 6 of subchapter B of Chapter 1 is amended by inserting after Section 174 the following new section. Section 174A, domestic research or experimental expenditures. A, treatment as expenses. Notwithstanding Section 263, there shall be allowed as a deduction any domestic research or experimental expenditures which are paid or incurred by the taxpayer during the taxable year. B, domestic research or experimental expenditures. For purposes of this section, the term domestic research or experimental expenditures means research or experimental expenditures paid or incurred by the taxpayer in connection with the taxpayer's trade or business other than such expenditures which are attributable to foreign research within the meaning of Section 41D4F. C, amortization of certain domestic research or experimental expenditures in general at the election of the taxpayer made in accordance with regulations or guidance provided by the Secretary in the case of domestic research or experimental expenditures which would, but for subsection A, be chargeable to capital account but not chargeable to property of the character, which is subject to the allowance under Section 167 relating to allowance for depreciation, etc., or Section 611 relating to allowance for depletion, subsection A, shall not apply, and the taxpayer shall, A, charge such expenditures to capital account, and B, be allowed an amortization deduction of such expenditures ratably over such period of not less than 60 months as may be selected by the taxpayer, beginning with the month in which the taxpayer first realizes benefits from such expenditures. 2, time for and scope of election. The election provided by paragraph 1 may be made for any taxable year, but only if made not later than the time prescribed by law for filing the return for such taxable year, including extensions thereof. The method so elected and the period selected by the taxpayer shall be adhered to in computing taxable income for the taxable year for which the election is made, and for all subsequent taxable years, unless with the approval of the Secretary a change to a different method or to a different period is authorized with respect to part or all of such expenditures. The election shall not apply to any expenditure paid or incurred during any taxable year before the taxable year for which the taxpayer makes the election. D, special rules. 1, land and other property. This section shall not apply to any expenditure for the acquisition or improvement of land or for the acquisition or improvement of property to be used in connection with the research or experimentation and of a character which is subject to the allowance under Section 167 relating to allowance for depreciation, etc., or Section 611 relating to allowance for depletion, but for the purposes of this section, allowances under Section 167 and allowances under Section 611 shall be considered as expenditures. 2, expiration expenditures. This section shall not apply to any expenditure paid or incurred for the purpose of ascertaining the existence, location, extent, or quality of any deposit of ore or other mineral, including oil and gas. 3, software development. For purposes of this section, any amount paid or incurred in connection with the development of any software shall be treated as a research or experimental expenditure. B, coordination with certain other provisions. 1, foreign research expenses. Section 174 is amended. A, in subsection A, 1, by striking a taxpayer's specified research or experimental expenditures and inserting a taxpayer's foreign research or experimental expenditures, and 2, by striking over the 5-year period, 15-year period in the case of any specified research or experimental expenditures which are attributable to foreign research within the meaning of Section 41D4F, then paragraph 2B, and inserting over the 15-year period. B, in subsection B, 1, by striking specified research and inserting foreign research, 2, by inserting and which are attributable to foreign research within the meaning of Section 41D4F before the period at the end, and 3, by striking specified in the heading thereof and inserting foreign, and C, in subsection D, 1, by striking specified research or experimental expenditures and inserting foreign research or experimental expenditures, and 2, by inserting or reduction to amount realized after no deduction.
Two, research credit. A, Section 41D1A is amended to read as follows. A, with respect to which expenditures are treated as domestic research or experimental expenditures under Section 174A. B, Section 280CE1 is amended to read as follows. 1, in general, the domestic research or experimental expenditures otherwise taken into account under Section 174A shall be reduced by the amount of the credit allowed under Section 41A. 3, AMT adjustment. Section 56B2 is amended. A, in subparagraph A, 1, by striking or 174A in the matter preceding clause 1 and inserting 174A or 174AA, and 2, by striking research and experimental expenditures described in Section 174A in clause 2 thereof and inserting foreign research or experimental expenditures described in Section 174A and domestic research or experimental expenditures in Section 174AA, and B, in paragraph C, by inserting or 174A after 174AA. 4, optional 10-year write-off. Section 59E2B is amended by striking Section 174A relating to research and experimental expenditures and inserting Section 174AA relating to domestic research or experimental expenditures. 5, qualified small issue bonds. Section 144A4C4 is amended by striking 174A and inserting 174AA. 6, startup expenditures. Section 195C1 is amended by striking or 174 in the last sentence and inserting 174 or 174A. 7, capital expenditures. A, Section 263A1B is amended by inserting or 174A after 174. B, Section 263A C2 is amended by inserting or 174A after 174. 8, active business computer software royalties. Section 543D4A1 is amended by inserting 174A after 174. 9, source rules. Section 864G2 is amended, A, by striking research and experimental expenditures within the meaning of Section 174 in the first sentence and inserting foreign research or experimental expenditures within the meaning of Section 174, or domestic research or experimental expenditures within the meaning of Section 174, and B, in the last sentence, 1, by striking treated as deferred expenses under subsection B of Section 174 and inserting allowed as an amortization deduction under Section 174A or Section 174AC, and 2, by striking such subsection and inserting such section as the case may be. 10, basis adjustment. Section 1016A14 is amended by striking deductions as deferred expenses under Section 174B1 relating to research and experimental expenditures, and inserting deductions under Section 174 or 174AC. 11, small business stock. Section 1202E2B is amended by striking which may be treated as research and experimental expenditures under Section 174 and inserting which are treated as foreign research or experimental expenditures under Section 174 or domestic research or experimental expenditures under Section 174A. E, change in method or accounting. 1, in general, the amendments made by subsection A shall be treated as a change in method of accounting for purposes of Section 481 of the Internal Revenue Code of 1996, and A, such change shall be treated as initiated by the taxpayer. B, such change shall be treated as made with the consent of the Secretary, and C, such change shall be applied only on a cutoff basis for any domestic research or experimental expenditures as defined in Section 174AB of such code as added by this section, and determined by applying the rules of Section 174AD of such code, paid or incurred in taxable years beginning after December 31st, 2024, and no adjustments under Section 481A shall be made. 2, special rules. In the case of a taxable year which begins after December 31st, 2024, and ends before the date of the enactment of this Act, A, paragraph 1C shall not apply, and B, the change in method of accounting under paragraph 1 shall be applied on a modified cutoff basis, taking into account for purposes of Section 481A of such code only the domestic research or experimental expenditures as defined in Section 174AB of such code as added by the section, and determined by applying the rules of Section 174AD of such code, paid or incurred in such taxable year, but not allowed as a deduction in such taxable year. D, clerical amendment. The table of sections for Part 6 of Subchapter B of Chapter 1 is amended by inserting after the item relating to Section 174 the following new item. Section 174A, domestic research or experimental expenditures. C, effective date. 1, in general, except as otherwise provided in the subsection or subsection F1, the amendments made by this section shall apply to amounts paid or incurred in taxable years beginning after December 31st, 2024. 2, treatment of foreign research or experimental expenditures upon disposition. A, in general, the amendment by subsection B1, C2 shall apply to property disposed, retired, or abandoned after May 12th, 2025. B, no inference. The amendment made by subsection B1, C2 shall not be construed to create any inference with respect to the proper application of Section 174D of the Internal Revenue Code of 1996 with respect to taxable years beginning before May 13th, 2025. 3, coordination with research credit. The amendment made by subsection B2B shall apply to taxable years beginning after December 31st, 2024. 4, no inference with respect to coordination with research credit for prior periods. The amendment made by subsection B2B shall not be construed to create any inference with respect to the proper application of Section 280CE of the Internal Revenue Code of 1996 with respect to taxable years beginning before January 1st, 2025. F, transition rules. 1, election for retroactive application by certain small businesses. A, in general, at the election of an eligible taxpayer, paragraphs 1 and 3 of subsection E shall each be applied by substituting December 31st, 2021 for December 31st, 2024. An election made under this subparagraph shall be made in such manner as the Secretary may provide and not later than the date that is 1 year after the date of the enactment of this Act. The taxpayer shall file an amended return for each taxable year affected by such election. B, eligible taxpayer. For purposes of this paragraph, the term eligible taxpayer means any taxpayer other than the tax shelter prohibited from using the cash receipts and disbursements methods of accounting under Section 448A3, which meets the gross receipts test of Section 448E for the first taxable year beginning after December 31st, 2024. C, election treated as change in method of accounting. In the case of any taxpayer which elects the application of subparagraph A, 1, such election may be treated as a change in method of accounting for purposes of Section 41 of such code for the taxpayer's first taxable year affected by such election. 2, such change shall be treated as initiated by the taxpayer for such taxable year. 3, such change shall be treated as made with the consent of the Secretary. And 4, subsection C shall not apply to such taxpayer. D, election regarding coordination with research credit. An election under Section 280C E2 of the Internal Revenue Code of 1986, or revocation of such election for any taxable year beginning after December 31st, 2021, by an eligible taxpayer making an election under subparagraph A shall not fail to be treated as timely made or as made on the return if made during the 1-year period beginning on the date of the enactment of this Act on an amended return for such taxable year. 2, election to deduct certain unamortized amounts paid or incurred in taxable years beginning before January 1st, 2025. A, in general, in the case of any domestic research or experimental expenditures as defined in Section 174A as added by subsection A, which are paid or incurred in taxable years beginning after December 31st, 2021 and before January 1st, 2025, and which was charged to capital account, a taxpayer may elect 1, to deduct any remaining unamortized amount with respect to such expenditures in the first taxable year beginning after December 31st, 2024, or 2, to deduct such remaining unamortized amount with respect to such expenditures ratably over the 2 taxable year period beginning with the first taxable year beginning after December 31st, 2024. B, change the method of accounting. In the case of a taxpayer who makes an election under this paragraph, 1, such taxpayer shall be treated as initiating a change in method of accounting for purposes of Section 481 of the Internal Revenue Code of 1996 with respect to the expenditures to which the election applies. 2, such change shall be treated as made with the consent of the Secretary. And 3, such change shall be applied only on a cutoff basis for such expenditures. No adjustments under Section 481A shall be made. C, regulations. The Secretary of the Treasury or the Secretary's delegate shall publish such guidance and regulations as may be necessary to carry out the purposes of this paragraph, including regulations or guidance allowing for the deduction allowed under subparagraph A in the case of taxpayers with taxable years beginning after December 31st, 2024, and ending before the date of the enactment of this Act. Section 70303, modification of limitation on business interest. A, in general, Section 163J 8AV is amended by striking in the case of taxable years beginning before January 1st, 2025. B, floor plan financing applicable to certain trailers and campers. Section 163J9C is amended by adding at the end of the following new flush sentence, such terms shall also include any trailer or camper which is designed to provide temporary living quarters for recreational camping or seasonal use and is designed to be towed by or fixed to a motor vehicle. C, effective date and special rule. In general, the amendments made by this section shall apply to taxable years beginning after December 31st, 2024. 2, special rule for short taxable years. Secretary of the Treasury or the Secretary's delegate may prescribe such rules as are necessary or appropriate to provide for the application of the amendments made by this section in the case of any taxable year of less than 12 months that begins after December 31st, 2024, and ends before the date of the enactment of this Act. Section 70304, extension and enhancement of paid family and medical leave credit. A, in general, Section 45S is amended in subsection A, by striking paragraph 1 and inserting the following. 1, in general, For purposes of Section 38, in the case of an eligible employer, the paid family and medical leave credit is an amount equal to either of the following as elected by such employer. A, the applicable percentage of the amount of wages paid to qualifying employees with respect to any period in which such employees are on family and medical leave. B, if such employer has an insurance policy with regards to the provision of paid family and medical leave, which is in force during the taxable year, and the applicable percentage of the total amount of premiums paid or incurred by such employer during such taxable year with respect to such insurance policy, and B, by adding at the end of the following. 3, rate of payment determined without regard to whether leave is taken. For purposes of determining the applicable percentage with respect to paragraph 1B, the rate of payment under the insurance policy shall be determined without regard to whether any qualifying employees were on family and medical leave during the taxable year. 2, in subsection B1, by striking credit allowed and inserting wages taken into account. 3, in subsection C, by striking paragraphs 3 and 4 and inserting the following. 3, aggregation rule. A, in general, except as provided in subparagraph B, all persons which are treated as a single employer under subsections B and C of section 414 shall be treated as a single employer. B, exception 1, in general, subparagraph A shall not apply to any person who establishes to the satisfaction of the Secretary that such person has a substantial and legitimate business reason for failing to provide a written policy described in paragraph 1 or 2. 2, substantial and legitimate business reason. For purposes of Clause 1, the term substantial and legitimate business reason shall not include the operation of a separate line of business, the rate of wages or category of jobs for employees, or any similar basis, or the application of state or local laws relating to family and medical leave, but may include the grouping of employees of a common law employer. 4, treatment of benefits mandated or paid for by state or local governments. For purposes of this section, any leave which is paid by a state or local government is required by state or local law. A, except as provided in subparagraph B, shall be taken into account in determining the amount of paid family and medical leave provided to the employer, and B, shall not be taken into account in determining the amount of the paid family and medical leave credit under subsection A. 4, in subsection D, A in paragraph 1 by inserting, or at the election of the employer, for not less than 6 months after 1 year or more. B in paragraph 2 by inserting, as determined on an annualized basis, pro rata for part-time employees after compensation, and by striking the period at the end and inserting and by adding at the end of the following. 3, is customarily employed for not less than 20 hours per week, and 5, by striking subsection 1. B, no double benefit. Section 280CA is amended. 1, by striking 45SA and inserting 45SA1A, and 2, by inserting after the first sentence of the following. No deduction shall be allowed for that portion of the premiums paid or incurred for the taxable year which is equal to that portion of the paid family and medical leave credit which is determined for the taxable year under Section 45SA1B. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70305, exceptions from limitations on deduction for business meals. A, exception to denial of deduction for business meals. Section 274O, as added by Section 13304 of Public Law 11597, as amended by striking no deduction and inserting, except in the case of an expense described in subsection ES or N2C, no deduction. B, meals provided on certain fishing boats and at certain fish processing facilities not subject to 50% limitation. Section 274N2C of the Internal Revenue Code of 1986 is amended by striking or at the end of Clause 3 and by adding at the end of the following new clause. V, provided 1, on a fishing vessel, fish processing vessel, or fish tender vessel, as such terms are defined in Section 2101 of Title 46 U.S. Code, or 2, at a facility for the processing of fish for commercial use or consumption which AA is located in the United States north of 50 degrees north latitude, and BB is not located in a metropolitan statistical area within the meaning of Section 143K2B, or C, effective date. The amendments made by this section shall apply to amounts paid or incurred after December 31st, 2025. Section 70306. increased dollar limitations for expensing of certain depreciable business assets. A, in general, Section 179B is amended, 1 in paragraphs 1 by striking $1 million and inserting $2,500,000, and 2 in paragraph 2 by striking $2,500,000 and inserting $4 million. B, conforming amendments, Section 179B6A is amended, 1 by inserting 2025 in the case of the dollar amounts in paragraphs 1 and 2, after, in the case of any taxable year beginning after 2018, and 2 in clause 2 by striking determined by substituting calendar year 2017 for calendar year 2016 in subparagraph A2 thereof, and inserting determined by substituting in paragraph A2 thereof. 1 in the case of amounts in paragraphs 1 and 2, calendar year 2024 for calendar year 2016, and 2 in the case of the amount of paragraph 5A, calendar year 2017 for calendar year 2016. C, effective date. The amendments made by this section shall apply to property placed in service in taxable years beginning after December 31st, 2024. Section 70307, special depreciation allowance for qualified production property. A, in general, Section 168 is amended by adding at the end of the following new subsection. N, special allowance for qualified production property. 1, in general, in the case of any qualified production property of a taxpayer making an election under this subsection, A, the depreciation deduction provided by Section 167A for the taxable year in which such property is placed in service shall include an allowance equal to 100% of the adjusted basis of the qualified production property, and B, the adjusted basis of the qualified production property shall be reduced by the amount of such deduction before computing the amount otherwise allowable as a depreciation deduction under this chapter for such taxable year and any subsequent taxable year. 2, qualified production property. For purposes of this subsection, A, in general, the term qualified production property means that the portion of any non-residential real property, 1, to which this section applies, and 2, which is used by the taxpayer as an integral part of a qualified production activity, 3, which is placed in the service of the United States or any possession of the United States, 4, the original use of which commences with the taxpayer, 5, the construction of which begins after January 19th, 2025, and before January 1st, 2029, 6, which is designated by the taxpayer in the election made under this subsection, and 7, which is placed in service before January 1st, 2031. For purposes of Clause 2, in the case of a property with respect to which the taxpayer is a lessor, property used by a lessee shall not be considered to be used by the taxpayer as part of a qualified production activity. B, special rule for certain property not previously used in qualified production activities. 1, in general, in the case of property acquired by the taxpayer during the period described in subparagraph AV, the requirements of clauses 4 and 5 of subparagraph A shall be treated as satisfied if 1, such property was not used in a qualified production activity, determined without regard by the second sentence of subparagraph D, by any person at any time during the period beginning on January 1st, 2021, and ending on May 12th, 2025. 2, such property was not used by the taxpayer at any time prior to such acquisition. And 3, the acquisition of such property meets the requirements of paragraphs 2A, 2B, 2C, and 3 of Section 179D. 2, written binding contracts. For purposes of determining under Clause 1 whether such property is acquired before the period described in subparagraph AV, such property shall be treated as acquired not later than the date on which the taxpayer enters into a written binding contract for such acquisition. And H, whether such property is acquired under such period, such property shall be treated as acquired not earlier than such date. C, exclusion of office space, etc. The term qualified production property shall not include that portion of any non-residential real property which is used for offices, administrative services, lodging, parking, sales activities, research activities, software development or engineering activities, or other functions unrelated to the manufacturing, production, or refining of tangible personal property. D, qualified production activity. The term qualified production activity means the manufacturing, production, or refining of a qualified product. The activities of any taxpayer do not constitute manufacturing, production, or refining of the qualified product unless the activities of such taxpayer result in a substantial transformation of the property comprising the product. E, production. The term production shall not include activities other than agricultural production and chemical production. F, qualified product. The term qualified product means any tangible personal property if such property is not a food or beverage prepared in the same building as a retail establishment in which such property is sold. G, syndication. For purposes of subparagraph A4, rules similar to the rules of subsection K2E3 shall apply. H, extension of placed in service date under certain circumstances. The Secretary may extend the date under subparagraph A7 with respect to any property that meets the requirements of clauses 1 through 6 of subparagraph A if the Secretary determines that an act of God, as defined in section 101(1) of the Comprehensive Environmental Response, Compensation, and Liability Act of 1980, prevents the taxpayer from placing such property in service before such date. 3, deduction allowed in computing minimum tax. For purposes of determining alternative minimum taxable income under Section 55, the deduction under Section 167 for qualified production property shall be determined under the section without regard to any adjustment under Section 56. 4, coordination with certain other provisions. A, other special depreciation allowances. For purposes of subsections K7, 1(3)D, and M2(B)(3), 1, qualified production property shall be treated as a separate class of property, and 2, the taxpayer shall be treated as having made an election under such subsections with respect to such class. B, alternative depreciation property. The term qualified production property shall not include any property to which the alternative depreciation system under subsection G applies. For purposes of subsection G7A, qualified production property to which this subsection applies shall be treated as separate non-residential real property. 5, recapture. If at any time during the 10-year period, beginning on the date that any qualified production property is placed in service by the taxpayer, such property ceases to be used as described in paragraph 2A2 and is used by the taxpayer in a productive use not described in paragraph 2A2, section 1245 shall be applied. 1, by treating such property as having been disposed of by the taxpayer as of the first time such property is so used in a productive use not described in paragraph 2A2, and 2, by treating the amount described in subparagraph B of section 1245A1 with respect to such disposition as being not less than the amount described in subparagraph A of such section, and B, the basis of the taxpayer in such property and the taxpayer's allowance for depreciation with respect to such property shall be appropriately adjusted to take into account amounts recognized by reason of subparagraph A. 6, election. A, in general, an election under the subsection for any taxable year shall 1, specify the non-residential real property subject to the election and the portion of such property designated under paragraph 2A6, and 2, except as otherwise provided by the Secretary, be made on the taxpayer's return of the tax imposed by this chapter for the taxable year. Such elections shall be made in such a manner as the Secretary may prescribe by regulations or other guidance. B, election. Any election made under this subsection and any specification contained in any such election may not be revoked except with the consent of the Secretary, and the Secretary shall provide such consent only in extraordinary circumstances. 7, regulations. The Secretary shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this subsection, including regulations or other guidance. A, providing rules regarding what constitutes substantial transformations of property which are consistent with guidance provided under section 954D, and B, providing for the application of paragraph 5 with respect to a change in use described in such paragraph by transferee following a fully or partially tax-free transfer of qualified production property. B, treatment of qualified production property as section 1245 property. Section 1245A3 is amended by striking or at the end of subparagraph E, by striking the period at the end of subparagraph F and inserting or, and by adding at the end of the following new subparagraph. G, any qualified production property as defined in section 168N2. C, effective date. The amendments made by this section shall apply to property placed in service after the date of the enactment of this act. Section 70308, enhancement of advanced manufacturing investment credit. A, in general, section 48DA is amended by striking 25% and inserting 35%. B, effective date. The amendments made by this section shall apply to property placed in service after December 31st, 2025. Section 70309, spaceports are treated like airports under exempt facility bond rules. A, in general, Section 142A1 is amended to read as follows. 1. Airports and spaceports. B. Treatment of ground leases. Section 142B1 is amended by adding at the end of the following new subparagraph. C. Special rule for spaceport ground leases. For purposes of subparagraph A, spaceport property located on land leased by a governmental unit from the United States shall not fail to be treated as owned by a governmental unit if the requirements of this paragraph are met by the lease and any subleases of the property. C. Definition of spaceport. Section 142 is amended by adding at the end of the following new subsection. P. Spaceport. In general, for purposes of subsection A1, the term spaceport means any facility located or in use in close proximity to a launch site or re-entry site used for A, manufacturing, assembling, or repairing spacecraft, space cargo, or other facilities as described in this paragraph, or any component of the foregoing. B, flight control operations. C, providing launch services and re-entry services, or D, transferring crew, space flight participants, or space cargo to or from spacecraft. 2, additional terms. For purposes of paragraph 1, A, space cargo. The term space cargo includes satellites, scientific experiments, other property transported in space, and any other type of payload, whether or not such property returns from space. B, spacecraft. The term spacecraft means a launch vehicle or a re-entry vehicle. C, other terms. The terms launch site, crew, space flight participant, launch services, launch vehicle, payload, re-entry services, re-entry site. A re-entry vehicle shall have the respective meanings given to such terms by Section 50902 of Title 51 United States Code as in effect on the date of enactment of this subsection. 3, public use requirement. Notwithstanding any other provision of law, a facility shall not be required to be available for use by the general public to be treated as a spaceport for purposes of this section. 4, manufacturing facilities and industrial parks allowed. With respect to spaceports, subsection C2E shall not apply to spaceport property described in paragraph 1A. D, exception from federally guaranteed bond prohibition. Section 149B3 is amended by adding at the end of the new paragraph, F, subsection exception for spaceports. A bond shall not be treated as federally guaranteed merely because of the payments of rent, user fees, or other charges by the United States, or any agency or instrumentality thereof, in exchange for the use of the spaceport by the United States, or any agency or instrumentality thereof. E, conforming amendment. The heading for Section 142E is amended by inserting spaceports after airports.
F, effective date. The amendments made by this section shall apply to obligations issued after the date of enactment of this act. Subchapter B, permanent. America First International Trade Reforms, Part 1, Foreign Tax Credit, Section 70311, modifications related to foreign tax credit limitations. A, rules for allocation of certain deductions to foreign source net CFC tested income for purposes of foreign tax credit limitation. Section 904B is amended by adding at the end the following new paragraph. 5, deductions treated as allocable to foreign source net CFC tested income solely for purposes of the application of subsection A with respect to amounts described in subsection D1A. The taxpayer's taxable income from sources without the United States shall be determined by allocating and apportioning A, any deduction allowed under section 250A1B, and any deduction allowed under section 164A3 for taxes imposed on amounts described in section 250A1B to such income. No amount of interest, expense, or research and experimental expenditures to such income, and C, any other deduction to such income only if such deduction is directly allocable to such income. Any amount or deduction which would but for subparagraphs B and C have been allocated or apportioned to such income shall only be allocated or apportioned to income which is from sources within the United States. B, other modifications. Section 904 D2H1 is amended by striking paragraph 1B and inserting paragraph 1D. 2, section 904 D4C2 is amended by striking paragraph 1A and inserting paragraph 1C. 3, section 951A F1A is amended by striking 904H1 and inserting 904H. Effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70312, modification to determination of deemed paid credit for taxes properly attributable to tested income. A, increase in deemed paid credit. 1, in general, section 960D1 is amended by striking 80% and inserting 90%. 2, gross up for deemed paid foreign tax credit. Section 78 is amended. A, by striking subsections A, B, and D and inserting subsections A and D, and B, by striking 80% and inserting 90%. B, disallowance of foreign tax credit with respect to distributions of previously taxed net CFC tested income. Section 960D is amended by adding at the end of the following new paragraph. 4, disallowance of foreign tax credit with respect to distributions of previously taxed net CFC tested income. No credit shall be allowed under Section 901 for 10% of any foreign income tax paid or accrued or deemed paid under subsection B1 with respect to any amount excluded from gross income under Section 959A by reason of an inclusion in gross income under Section 951AA. C, effective dates. In general, the amendments made by subsection A shall apply to taxable years beginning after December 31st, 2025. Disallowance. The amendment made by subsection B shall apply to amounts distributed after June 28, 2025. Section 70313, sourcing certain income from the sale of inventory produced in the United States. A, in general, Section 904B, as amended by Section 70311, is amended by adding at the end the following new paragraph. 6, source rules for certain inventory produced in the United States and sold through foreign branches. For purposes of this section, if a United States person maintains an office or other fixed place of business in a foreign country, determined under rules similar to the rules of Section 864C5, the portion of income which A, is from the sale or exchange outside the United States of inventory property within the meaning of Section 86511, 1, which is produced in the United States, 2, which is for use outside the United States, 3, which is the third sentence of Section 863B applies, and B is attributable to determined under rules similar to the rules of Section 864C5 to such office or other fixed place of business shall be treated as from sources without the United States, except that the amount so treated shall not exceed 50% of the income from the sale or exchange of such inventory property. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Part 2, foreign-derived deduction, eligible income, and net CFC tested income. Section 70321. Modification of deduction for foreign-derived deduction, eligible income, and net CFC tested income. A, in general, Section 250A is amended, 1, by striking 37.5% in paragraph 1A and inserting 33.34%. 2, by striking 50% in paragraph 1B and inserting 40%, and by striking paragraph 3. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70322, determination of deduction eligibility income. A, sales or other disposition of certain property. 1, in general, Section 250B3A1 is amended by striking and at the end of the subclause 5 and by striking over at the end of subclause 6 and inserting and C by adding at the end of the following new subclause 7, except as otherwise provided by the Secretary, any income and gain from the sale or other disposition, including pursuant to a transaction subject to section 367D of AA, intangible property as defined in section 367D4, and BB, any property of a type that is subject to depreciation, amortization, or depletion by the seller over. 2, conforming amendment, section 250B5E, as amended by inserting other than paragraph 3A17 for purposes of this subsection. 3, effective date. The amendments made by this subsection shall apply to the sale or other dispositions, including pursuant to a transaction subject to section 367D of the Internal Revenue Code of 1986, occurring after June 16, 2025. B, expense apportion limited to properly allocable expenses. 1, in general, section 250B3A2 is amended to read as follows. 2, expenses and deductions, including taxes other than interest expenses and research or experimental expenditures properly allocable to such gross income. 2, effective date. The amendment made by this subsection shall apply to taxable years beginning after December 31st, 2025. Section 70323, rules related to deemed intangible income. A, taxation of net CFC tested income. 1, in general, section 951AA is amended by striking global intangible low taxed income and inserting net CFC tested income. 2, repeal of tax-free deemed return on foreign investment, section 951A, as amended by the preceding provisions of this act, as amended by striking subsections B and D and redesignating subsections C, E, and F as subsections A, B, and D, respectively. 3, conforming amendments. A1, section 250 is amended by striking global intangible low taxed income. Each place it appears in subsection A1, B1, A2, and B3A1, 2, and inserting net CFC tested income. 2, the heading for section 250 of such code is amended by striking global intangible low taxed income and inserting net CFC tested income. 3, the item relating to section 250 in the table of section for part 7 of subchapter B, chapter 1 of such code is amended by striking global intangible low taxed income and inserting net CFC tested income. B, section 951A C1 as redesignated by paragraph 2 is amended by striking subsection B C1A and C1B and inserting subsection B1A and B1B. C, section 951AD as redesignated by paragraph 2 is amended, 1, by striking global intangible low income each place it appears and inserting net CFC tested income, and 2, by striking subsection C1A in paragraph 2B2 and inserting subsection B1A. D, section 960D2 is amended, 1, by striking global intangible low taxed income and subparagraph A and inserting net CFC tested income, and 2, by striking section 951A C1A and subparagraph B and inserting section 951A B1A. E1, the heading for section 951A is amended by striking global intangible low tax income and inserting net CFC tested income. 2, the item relating to section 951A in the table of sections for subpart F of part 3 and subchapter N of chapter 2 or 1 is amended by striking global intangible low tax income and inserting net CFC tested income. Deductions for foreign derived deduction eligible income. 1, in general, section 250A1A is amended by striking foreign derived intangible income and inserting foreign derived deduction eligible income. 2, conforming amendment. Section 250A2 is amended by striking foreign derived intangible income each place it appears and inserting foreign-derived deduction eligible income. B, Section 250B as amended by subsection A as amended, 1, by striking paragraphs 1 and 2, 2, by redesignating paragraphs 4 and 5 as paragraphs 1 and 2 respectively, and by moving such paragraphs before paragraph 3, 3, and paragraph 2B2 as so redesignated by striking paragraph 4B and inserting paragraph 1B, and 4, by striking intangible in the heading thereof and inserting deduction eligible. C1, the heading for Section 250 is amended by striking intangible in the heading thereof and inserting deduction eligible. 2, the heading for Section 172D9 is amended by striking intangible and inserting deduction eligible. 3, the item relating to Section 250 in the table of section for Part 8 of Subchapter B, Chapter 1 is amended by striking intangible and inserting deduction eligible. C, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Part 3, base erosion minimum tax, Section 70331. Extension and modification of base erosion minimum tax. A, in general, Section 59AB is amended, 1, by striking 10% in paragraphs 1 and inserting 10.5%, and 2, by striking paragraph 2 and redesignating paragraphs 3 and 4 as paragraphs 2 and 3 respectively. B, conforming amendments. 1, Section 59AB1 is amended by striking except as provided in paragraphs 2 and 3 and inserting except as provided in paragraphs 2. 2, Section 59AB2 as redesignated by subsection A2 is amended by striking the percentage otherwise in effect under paragraph 1A and 2A shall each be increased, and inserting the percentages otherwise in effect under paragraph 1A shall be increased. 3, Sections 59E1C is amended by striking in the case of the taxpayer described in subsection B3B and inserting in the case of the taxpayer described in subsection B2B. C, other modifications. In Section 59A B2B2, as redesignated by subsection A2, is amended by striking registered securities dealer and inserting securities dealer registered. 2, Section 59H2B is amended by striking Section 603BB2 and inserting Section 6038AB2. 3, Section 59A12 is amended, A, by striking subsection G and inserting subsection H, and B, by striking subsection G3 and inserting subsection H3. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Part 4, business interest limitation. Section 70341, coordination of business interest limitation with interest capitalization provisions. A, in general, Section 163J is amended by redesignating paragraphs 10 and 11 as paragraphs 11 and 12, and by inserting after paragraph 9 the following. 10, coordination with interest capitalization provisions. A, in general, in applying this subsection. 1, the limitation under paragraph 1 shall apply to business interest without regard to whether the taxpayer would otherwise deduct such business interest or capitalize such business interest under an interest capitalization provision. And 2, any reference in this subsection to a deduction for a business interest shall be treated as including a reference to the capitalization of business interest. B, amount allowed applied first to be capitalized interest. The amount allowed after taking into account the limitation described in paragraph 1 shall be applied first to the aggregate amount of business interest which would otherwise be capitalized, and 2, the remainder of any shall be applied to the aggregate amount of business interest which would be deducted. C, treatment of disallowed interest carried forward. No portion of any business interest carried forward under paragraph 2 from any taxable year to any succeeding taxable year for purposes of this title, including any interest capitalization provisions which previously applied to such portion, to be treated as interest to which an interest capitalization provision applies. D, interest capitalization provision. For purposes of this section, the term interest capitalization provision means any provision of this subtitle under which interest, 1, is required to be charged to capital account, or 2, may be deducted or charged to capital account. B, certain capitalized interest not treated as business interest. Section 163J5 is amended by adding at the end the following new sentence. Such terms shall not be included in any interest which is capitalized under Section 263G or 263AF. C, regulatory authority, Section 163J, as amended by subsection A, is amended by redesignating paragraphs 11 and 12 as paragraphs 12 and 13, and by inserting after paragraph 10 the following. 1. Regulatory authority. The Secretary shall issue such regulations or guidance as may be necessary or appropriate to carry out the purposes of this subsection, including regulations or guidance to determine which business interest is taken into account under this subsection and Section 59AC3. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70342. Definition of adjusted taxable income for business interest limitations. A, in general, subparagraph A of Section 163J8 is amended. 1, by striking and at the end of the clause 4, and 2, by adding at the end the following new clause. 6, the amounts included in gross income under Sections 951A, 951AA, and 78, and the portion of the deductions allowed under Sections 245AA by reason of Section 964E4 and 250A1B by reason of such inclusion, and B, effective date. The amendments made by this section shall be applied to taxable years beginning after December 31st, 2025. Part 5, Other International Tax Reforms, Section 70351. Permanent extension of look-through rule for related controlled foreign corporations. A, in general, Section 954C6C is amended by striking and before January 1st, 2026. B, effective date. The amendment made by this section shall apply to taxable years of foreign corporations beginning after December 31st, 2025. Section 70352, repeal of election for 1 month deferral in determination of taxable year of specified foreign corporations. A, in general, Section 898C is amended by striking paragraph 2 and redesignating paragraph 3 as paragraph 2. B, effective date. The amendment made by this section shall apply to taxable years of specific foreign corporations beginning after November 30th, 2025. C, transition rule. 1, in general, in the case of the corporation that is a specific foreign corporation as of November 30th, 2025, such corporation's first taxable year beginning after such date shall end in the same time as the first required year within the meaning of Section 898C1 of the Internal Revenue Code of 1986, ending after such date if any specified foreign corporation is required by the amendments made by this section to change its taxable year for its first taxable year beginning after November 30th, 2025. A, such change shall be treated as initiated by such corporation. B, such change shall be treated as having been made with the consent of the Secretary. And C, the Secretary shall issue regulations or other guidance for allocating foreign taxes that are paid or accrued in such first taxable year and the succeeding taxable year among such taxable years in the manner the Secretary determines appropriate to carry out the purposes of this section. 2, Secretary. For the purposes of this subsection, the term Secretary means the Secretary of the Treasury or the Secretary's delegate. Section 70353, restoration of limitations on downward attribution of stock ownership and applying constructive ownership rules. A, in general, Section 958B as amended. 1, by inserting after paragraph 3 the following. 4, subparagraphs A, B, and C of Section 318A shall not be applied so as to consider a United States person as owning stock which is owned by a person who is not a United States person, and 2, by striking paragraph 1 in the last sentence and inserting paragraphs 1 and 4. B, foreign-controlled United States shareholders. Subpart F of Part 3, Subchapter N of Chapter 1 is amended by inserting after Section 951A the following new section. Section 951B. Amounts included in gross income of foreign-controlled United States shareholders. A, in general, in the case of any foreign-controlled United States shareholder of a foreign-controlled foreign corporation, 1, this subpart other than Section 951A, 951B, and 957 shall be applied with respect to each shareholder, to such shareholder, separately from and in addition to the application of this subpart without regard to this section. A, by substituting foreign-controlled United States shareholder for United States shareholder, each place it appears therein, and B, by substituting foreign-controlled foreign corporation for controlled foreign corporation, each place it appears therein, and 2, Section 951A and such other provisions of this subpart as provided by the Secretary shall be applied with respect to such shareholder. A, by treating each reference to United States shareholder in such section as including a reference to such shareholder, and B, by treating each reference to controlled foreign corporation in such section as including a reference to such foreign-controlled foreign corporations. B, foreign-controlled United States shareholder. For purposes of this section, the term foreign-controlled United States shareholder means, with respect to any foreign corporation, any United States person which would be a United States shareholder with respect to such foreign corporation. If 1, Section 951B were applied to substituting more than 50% for 10% or more, and 2, Section 958B were applied without regard to paragraph 4 thereof. C, foreign-controlled foreign corporation. For purposes of this section, the term foreign-controlled foreign corporation means a foreign corporation other than a controlled foreign corporation, which would be a controlled foreign corporation if Section 957A were applied. 1, by substituting foreign-controlled United States shareholder for United States shareholders, and 2, by substituting Section 958B other than paragraph 4 thereof for Section 958B. D, regulations. The Secretary shall prescribe such regulations or other guidance as may be necessary or appropriate to carry out the purpose of this section, including regulations or other guidance. 1, to treat a foreign-controlled United States shareholder or a foreign-controlled foreign corporation as a United States shareholder or as a controlled foreign corporation, respectively, for purposes of provisions of this title other than this subpart, including any reporting requirements. And 2, with respect to the treatment of foreign-controlled foreign corporations that are passive foreign investment companies as defined in Section 921-97. C, clerical amendment. The table of sections for Subpart F of Part 3 of Subchapter N of Chapter 1 is amended by inserting after the item relating to Section 951 the following new item. C 951B, amounts included in the gross income of foreign-controlled United States shareholders. D, effective date. The amendments made by this section shall apply to taxable years of foreign corporations beginning December 31st, 2025. E, special rule. 1, in general, except to the extent provided by the Secretary of the Treasury or the Secretary's delegate, the effective date of any amendment to the Internal Revenue Code of 1986 shall be applied by treating references to United States shareholders as references to foreign-controlled United States shareholders, and by treating references to controlled foreign corporations as references to foreign-controlled foreign corporations. 2, definitions. Any term used in this paragraph 1, which is used in Subpart F of Part 3 of Subchapter N of Chapter 1 of the Internal Revenue Code of 1986 as amended by this section, shall have the meaning given such term in such subpart. F, no inference. The amendments made by this section shall not be construed to create any inference with respect to the proper application of any provision of the Internal Revenue Code of 1986 with respect to taxable years beginning before the taxable years to which such amendments apply. Section 70354, modification to pro rata share rules. In general, subsection A of section 951 is amended to read as follows. A, amounts included. 1, in general, if a foreign corporation is a controlled foreign corporation at any time during a taxable year of a foreign corporation in this subsection referred to as the CFC year, A, each United States shareholder which owns within the meaning of section 958A stock in such corporation or on any day during the CFC year shall include in gross income such shareholders' pro rata share determined under paragraph 2 of the corporation's subpart F income for the CFC year, and B, each United States shareholder which owns within the meaning of section 958A stock in such corporation on the last day in the CFC year on which such corporation is controlled foreign corporation shall include in gross income the amount determined under section 956 with respect to such shareholder for the CFC year, but only to the extent not excluded from gross income under section 959A2. 2, pro rata share of subpart F in income. A United States shareholder's pro rata share of a controlled foreign corporation subpart F income for a CFC year shall be the portion of such income which is attributable to A, the stock of such corporation owned within the meaning of section 958A by such shareholder, and B, any period of the CFC year during which 1, such shareholder owned within the meaning of section 958A such stock, 2, such shareholder was a United States shareholder of such corporation, and 3, such corporation was a controlled foreign corporation. 3, taxable year of inclusion. Any amount required to be included in gross income by a United States shareholder under paragraph 1 with respect to a CFC year shall be included in gross income for the shareholder's taxable year, which includes the last day on which the shareholder owns within the meaning of section 958A stock in the controlled foreign corporation during such CFC year. 4, regulatory authority. The Secretary shall prescribe such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this subsection, including regulations or other guidance allowing taxpayers to elect or requiring taxpayers to close the taxable year of a controlled foreign corporation upon a direct or indirect disposition of stock of such corporation. B, coordination with Section 951A, Section 951AC, as redesignated by Section 70323A2, is amended. 1, in paragraph 1 by striking in which or which the taxable year of the controlled foreign corporation ends, and inserting determined under Section 951A3, and 2, in paragraph 2 by striking the last day in the taxable year of such foreign corporation on which such foreign corporation is controlled foreign corporation, and inserting any day in such taxable year. C, effective dates.
One, in general, the amendments made by this section shall apply to taxable years of foreign corporations beginning after December 31st, 2025. 2, transition rule for dividends. A dividend paid or deemed paid by a controlled foreign corporation shall not be treated as a dividend for purposes of applying Section 951, A2B of the Internal Revenue Code of 1986, as in effect before the amendments made by this section if A, such dividend, 1, was paid or deemed paid on or before June 28, 2025, during the taxable year of such controlled foreign corporation, which included such date and the United States shareholder described in Section 951A1 of such code as so in effect did not own, within the meaning of Section 958A of such code, the stock of such controlled foreign corporation during the portion of such taxable year on or before June 28, 2025, or 2, was paid or deemed paid after June 28, 2025, and before such controlled foreign corporation's first taxable year beginning after December 31st, 2025. B, such dividends does not increase the taxable income of a United States person, including by reason of dividends received deduction and inclusion from gross income or an exclusion from Subpart F income. Chapter 4, investing in American families, communities, and small businesses. Subchapter A, permanent investments in families and children, Section 70401, enhancement of employer-provided child care credit. A, increase of amount of qualified child care expenditures taken into account. Section 45FA1 is amended by striking 25% and inserting 40%, 50% in the case of an eligible small business. B, increase of maximum credit amount. Subsection B of Section 45F is amended to read as follows. B, dollar limitation. 1, in general, the credit allowable under subsection A for any taxable year shall not exceed $500,000, $600,000 in the case of an eligible small business. 2, inflation adjustment. In the case of any taxable year beginning after 2026, the $500,000 and $600,000 amounts in paragraph 1 shall each be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under Section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2025 for calendar year 2016, and subparagraph A2 thereof. C, eligible small business. Section 45F(C) is amended by adding at the end the following new paragraph. 4, eligible small business. The term eligible small business means a business that meets the gross receipts test of Section 448C, determined A, by substituting 5 taxable year for 3 taxable year in paragraph 1 thereof, and B, substituting 5 year for 3 year in paragraph 3A thereof. D, credit allowed for third-party intermediaries. Section 45FC1A3 is amended by inserting or under contract with an intermediate entity that contracts with one or more qualified child care facilities to provide such child care services before the period at the end. E, treatment of jointly owned or operated child care facility. Section 45FC2 is amended by adding at the end the following new subparagraph. C, treatment of jointly owned or operated child care facility. A facility shall not fail to be treated as qualified child care facility of the taxpayer merely because such facility is jointly owned or operated by the taxpayer and other persons. F, regulation and guidance. Section 45F is amended by adding at the end the following new subsection. G, regulations and guidance. The Secretary shall issue such regulations or other guidance as may be necessary to carry out the purposes of this section, including guidance to carry out the purposes of paragraphs 1A, 3, and 2C of subsection C. G, effective date. The amendments made by this section shall apply to amounts paid or incurred after December 31st, 2025. Section 70402, enhancement of adoption credit. A, in general. Section 23A is amended by adding at the end the following new paragraph. 4, portion of credit refundable. So much of the credit allowed under paragraph 1 as does not exceed $5,000 shall be treated as a credit allowed under subpart C and not as a credit allowed under this subpart. B, adjustments for inflation. Section 23H is amended to read as follows. H, adjustments for inflation. 1, in general, in the case of taxable year beginning after December 31st, 2002, each of the dollar amounts in paragraphs 3 and 4 of subsection A and paragraphs 1 and 2A1 of subsection B shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under Section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2001 for calendar year 2016, and subparagraph A2 thereof. 2, rounding. If any amount as increased under paragraph 1 is not a multiple of 10, such amount shall be rounded to the nearest multiple of 10. 3, special rule for refundable portion. In the case of the dollar amount in subsection A4, paragraph 1 shall be applied A by substituting 2025 for 2002 in the matter preceding subparagraph A, and B by substituting calendar year 2024 for calendar year 2001 and subparagraph B thereof. C, exclusion of refundable portion of credit from carry forward. Section 23C1 is amended by striking credit allowable under subsection A and inserting portion of the credit allowable under subsection A, which is allowed under this subpart. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70403, recognizing Indian tribal governments for purposes of determining whether a child has a special needs for purposes of the adoption credit. A, in general, Section 23D3 is amended. 1, in subparagraph A by inserting or Indian tribal government after a state. 2, in subparagraph B by inserting or Indian tribal government after such state. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70404, enhancement of the dependent care assistance program. A, in general, Section 129A2A is amended by striking $5,000, $2,500, and inserting $7,500, $3,750. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70405, enhancement of child and independent care tax credit. A, in general, paragraph 2 of section 21A is amended to read as follows. 2, applicable percentage defined. For purposes of paragraph 1, the term applicable percentage means 50%. A, reduced but not below 35%. By 1 percentage point for each $2,000 or fraction thereof by which the taxpayer's adjusted gross income for the taxable year exceeds $15,000, and B, further reduced but not below 20% by 1 percentage point for each $2,000, $4,000 in the case of a joint return, or fraction thereof by which the taxpayer's adjusted gross income for the taxable year exceeds $75,000, $150,000 in the case of a joint return. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Subchapter B, permanent investments in student reforms and to tax-exempt institutions. Section 70411, tax credit for contributions of individuals to scholarship-granting organizations. A, allowance of credit for contributions of individuals to scholarship-granting organizations. 1, in general, subpart A of part 4 of subchapter A of chapter 1 is amended by inserting after section 25E the following new section. Section 25F, qualified elementary and secondary education scholarships. A, allowance of credit. In the case of an individual who is a citizen or resident of the United States within the meaning of section 7701A9, there shall be allowed as a credit against the tax imposed by this chapter for the taxable year an amount equal to the aggregate amount of qualified contributions made by the taxpayer during the taxable year. B, limitations. 1, in general, the credit allowed under subsection A to any taxpayer for any taxable year shall not exceed an amount equal to or greater of A, 10% of the adjusted gross income of the taxpayer for the taxable year, or B, $5,000. 2, allocation of volume cap. The credit allowed under subsection A to any taxpayer for any taxable year shall not exceed the amount of the volume cap allocated by the Secretary to such taxpayer under subsection H, with respect to qualified contributions made by the taxpayer during taxable year. 3, reduction based on state credit. The amount allowed as a credit under subsection A for taxable year shall be reduced by the amount allowed as a credit on any state tax return of the taxpayer for qualified contributions made by the taxpayer during the taxable year. C, definitions. For purpose of this section, 1, eligible student. The term eligible student means an individual who, A, is a member of a household with an income which, for the calendar year prior to the date of the application for a scholarship, is not greater than 300% of the area median gross income, as such term is used in section 42, and B, is eligible to enroll in a public elementary or secondary school. 2, qualified contribution. The term qualified contribution means a charitable contribution as defined by section 170C to a scholarship granting organization in the form of cash or publicly traded securities as defined in section 6050LA2B. 3, qualified elementary or secondary education expense. The term qualified elementary or secondary education expense means the following expenses in connection with enrollment or attendance at or for students enrolled at or attending an elementary or secondary public, private, or religious school. A, tuition. B, curriculum and curricular materials. C, books or other instructional materials. D, online educational materials. E, tuition for tutoring or educational classes outside of the home, including a tutoring facility, but only if the tutor or instructor does not bear a relationship to the student, which is described in section 152D. 2, and 1, is licensed as a teacher in any state. 2, has taught at 1, a public or private elementary or secondary school, or 2, an institution of higher education, as defined in section 101A of the Higher Education Act of 1965, 20 U.S.C. 1001A, or 3, is a subject matter expert in the relevant subject. F, fees for a nationally standardized norm-referenced achievement test, an advanced placement examination, or any examination related to college or university admission. G, fees for dual enrollment in an institution of higher education. H, educational therapies for students with disabilities provided by a licensed or accredited practitioner or provider, including occupational, behavioral, physical, and speech-language therapies, but only if the practitioner or provider does not bear a relationship to the student, which is described in section 152D2. 4, scholarship granting organization. The term scholarship granting organization means any organization, A, which 1, is described in section 501c3 and exempt from tax under 501A, and 2, is not a private foundation. B, substantially all of the activities of which are providing scholarships for qualified elementary or secondary education expenses of eligible students. C, which prevents the commingling of qualified contributions with other amounts by maintaining one or more separate accounts exclusively for qualified contributions. D is approved to operate in the state in which such organization grants scholarships, and E, which satisfies the requirements of subsection D. D, requirements for scholarship granting organization. 1, in general, an organization meets the requirements of this subsection if A, such organization provides scholarships to 10 or more students who do not all attend the same school. B, such organization spends not less than 90% of revenues on scholarships for eligible students. C, such organization does not provide scholarships for any expenses other than qualified elementary or secondary education expenses. D, such organization provides a scholarship to eligible students with a priority for 1, students awarded a scholarship the previous school year, and 2, after application of Clause 1, any eligible students who have a sibling who is awarded a scholarship from such organization. E, such organization does not earmark or set aside contributions for scholarships on behalf of any particular student. F, such organization, 1, verifies the annual household income and family size of eligible students who apply for scholarships in a manner which complies with the requirement described in paragraph 2, and 2, limits the awarding of scholarships to eligible students who are a member of a household for which the income does not exceed the amount established under subsection C1A. G, such organization, 1, obtains from an independent certified public accountant annual financial compliance audits, and 2, certifies to the Secretary at such time and in such form and manner as the Secretary may prescribe that the audit described in Clause 1 has been completed, and H, no officer or board member of such organization has been convicted of a felony. 2, income verification. The requirement described in this paragraph is that the organization review all of the following documents which are applicable with respect to members of the household of the applicant for the calendar year prior to application for a scholarship. A, federal and state income tax returns, or tax returns transcripts with applicable schedules. B, income reporting statements for tax purposes or wage and income transcripts from the Internal Revenue Service. C, notarized income verification letter from employees. D, unemployment or workers' compensation statements. E, benefit verification letters regarding public assistance payments and supplemental nutrition assistance program payments, including a list of household members. 3, independent certified public accountant. For purposes of paragraph 1F, the term independent certified public accountant means, with respect to an organization, a certified public accountant who is not a person described in section 465B3A with respect to such organization or any employee of such organization. 4, prohibition of self-dealing. A, in general, a scholarship-granting organization may not award a scholarship to 1, any disqualified person, or 2, an eligible student if during the taxable year or the period of the 3 taxable years preceding such taxable year, such scholarship-granting organization has received a qualified contribution for an individual who bears a relationship to such student, which is described in section 152D2. B, disqualified person. For purposes of this paragraph, a disqualified person shall be determined pursuant to rules similar to the rules of section 4946. E, denial of double benefit. Any qualified contribution for which a credit is allowed under this section shall not be taken into account as a charitable contribution for purposes of section 170. F, carry forward of unused credit. 1, in general, if the credit allowable under subsection A for any taxable year exceeds the limitations imposed by section 26A for such taxable year reduced by the sum of the credits allowable under this subpart, other than this section, section 23 and section 25D, such excess shall be carried to the succeeding taxable year and added to the credit allowable under subsection A for such taxable year. 2, limitation. No credit may be carried forward under the subsection to any taxable year following the 5th taxable year after the taxable year in which the credit arose. For purposes of the preceding sentence, credit shall be treated as used on a first in, first out basis. G, rule of construction. Nothing in this section shall be construed to permit, allow, encourage, or authorize any federal control over any aspect of any private or religious school. H, volume cap. 1, in general, the volume cap applicable under this section shall be $4 billion for calendar year 2027 and each calendar year thereafter. Such amount shall be allocated by the Secretary as provided in paragraph 2 to taxpayers with respect to qualified contributions made by such taxpayers, except that 10% of such amount shall be divided evenly among the states and shall be available with respect to individuals residing in such states. 2, first come, first served. For purposes of applying the volume cap under this section, such volume cap for any calendar year shall be allocated by the Secretary on a first come, first served basis, as determined based on the time during such calendar year at which the taxpayer made the qualified contribution with respect to which the allocation is made. The Secretary shall not make any allocation of the volume cap for any calendar year after December 31st of such calendar year. 3, real-time information. For purposes of this section, the Secretary shall develop a system to track the amount of qualified contributions made during the calendar year for which a credit may be claimed under this section, with such information to be updated in real time. 4, state. For purposes of this subsection, the term state means only the states and the District of Columbia. 1, regulation and guidance. The Secretary shall issue such regulations or other guidance as the Secretary determines necessary to carry out the purposes of this section, including regulations or other guidance. 1, providing for enforcement of the requirements under subsection D4, and 2, with respect to record keeping or information reporting for purposes of administrating the requirements of this section. 2, conforming amendments. A, section 25E1C is amended by striking N25D and inserting 25D and 25F. B, the table of sections for subpart A of part 4, subchapter A of chapter 1 is amended by inserting after the item relating to section 25E the following new item. Section 25F, qualified elementary and secondary education scholarships. B, exclusion from gross income for scholarships for qualified elementary or secondary education expenses of eligible students. 1, in general, Part 3 of Subchapter B of Chapter 1 is amended by inserting before Section 140 the following new section. Section 139K, scholarships for qualified elementary or secondary education expenses of eligible students. A, in general, in the case of an individual, gross income shall not include any amounts provided to such individual or any dependent of such individual pursuant to a scholarship for qualified elementary or secondary education expenses of an eligible student which is provided by a scholarship granting organization. B, definitions. In this section, the term qualified elementary or secondary education expense, eligible student, and scholarship granting organization have the same meaning given in such terms under section 25FC. Conforming amendment. The table of sections for Part 3 of Subchapter B in Chapter 1 is amended by inserting before the item relating to Section 140 the following new item. Section 139K, scholarships for qualified elementary or secondary education expenses of eligible students. C, failure of scholarship granting organizations to make distributions. 1, in general, Chapter 42 is amended by adding at the end the following new subchapter. Subchapter 1, scholarship granting organizations. Section 4969, failure to distribute receipts. Section 4969, failure to distribute receipts. A, in general, in the case of any scholarship granting organization as defined in Section 25F, which has been determined by the Secretary to have failed to satisfy the requirements under subsection B for any taxable year, any contribution made to such organization during the first taxable year beginning after the date of such determination shall not be treated as a qualified contribution, as defined in Section 25F C2 for purposes of Section 25F. B, requirement. The requirement described in this subsection is that the amount of receipts of the scholarship granting organization for the taxable year, which are distributed before the distribution deadline with respect to such receipts, shall not be less than the required distribution amount with respect to such taxable year. C, definitions. For purposes of this section, 1, required distribution amount. A, in general, the required distribution amount with respect to a taxable year is the amount equal to 100% of the total receipts of the scholarship granting organization for such taxable year. 1, reduced by the sum of such receipts that are retained for reasonable administrative expenses for the taxable year or are carried to the succeeding taxable year under subparagraph C, and 2, increased by the amount of the carryover under subparagraph C from the preceding taxable year. B, safe harbor for reasonable administrative expenses. For purposes of subparagraph A1, if the percentage of total receipts of a scholarship granting organization for taxable year which are used for administrative expenses is equal to or less than 10%, such expenses shall be deemed to be reasonable for purpose of such subparagraph. C, carryover. With respect to the amount of the total receipts of a scholarship granting organization with respect to any taxable year, an amount not greater than 15% of such amount may, at the election of such organization, be carried to the succeeding taxable year. 2, distributions. The term distribution includes amounts which are formally committed but not distributed. A formal commitment described in the preceding sentence may include contributions set aside for eligible students for more than 1 year. 3, distribution deadline. The distribution deadline with respect to receipts for a taxable year is the first day of the third taxable year following the taxable year in which such receipts are received by the scholarship granting organization. D, regulation and guidance. The Secretary shall issue such regulation or other guidance as the Secretary determines necessary to carry out the purposes of this section, including regulations or other guidance which provides for requirements for record keeping or information reporting for purposes of administrating the requirements of this section. 2, clerical amendment. The table of subchapters for Chapter 42 is amended by adding at the end the following new item. Subchapter 1, scholarship granting organizations. D, effective date. 1, in general, except as otherwise provided in this subsection, the amendments made by this section shall apply to taxable years ending after December 31st, 2026. 2, exclusion from gross income. The amendments made by subsection B shall apply to amounts received after December 31st, 2026, in taxable years ending after such date. Section 70412, exclusion for employer payments of student loans. A, in general, Section 127C1B is amended by striking in the case of payments made before January 1st, 2026. B, inflation adjustment. Section 127 is amended, 1, by redesignating subsection D as subsection E, and 2, by inserting after subsection C the following new subsection, D, inflation adjustment. 1, in general, in the case of any taxable year beginning after 2026, both of the $5,250 amounts in subsection A2 shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2025 for calendar year 2016 in subparagraph A2 thereof. 2, rounding. If any increase under paragraph 1 is not a multiple of $50, such increase shall be rounded to the nearest multiple of $50. C, effective date. The amendment made by this section shall apply to payments made after December 31st, 2025. Section 70413, additional expenses treated as qualified higher education expenses for purposes of 529 accounts. A, in general. 1, in general, Section 529C7 is amended to read as follows. 7, treatment of elementary and secondary tuition. Any reference in this section to term qualified higher education expenses shall include a reference to the following expenses in connection with enrollment or attendance at or for students enrolled or at attending elementary or secondary public, private, or religious school. A, tuition. B, curriculum and curricular materials. C, books or other instructional materials. D, online educational materials. E, tuition for tutoring or educational classes outside of the home, including at a tutoring facility, but only if the tutor or instructor is not related to the student, and 1, is licensed as a teacher in any state. 2, has taught an eligible educational institution, or 3, is a subject matter expert in the relevant subject. F, fees for a nationally standardized norm reference achievement test, an advanced placement examination, or any examinations related to college or university admission. G, fees for dual enrollment in an institution of higher education. H, educational therapies for students with disabilities provided by a licensed or accredited practitioner or provider, included occupational, behavioral, physical, and speech-language therapies. 2, effective date. The amendment made by this subsection shall be distributions made after the date of the enactment of this act. B, increase of limitation. 1, in general, the last sentence of section 529E3 is amended by striking $10,000 and inserting $20,000. 2, effective date. The amendment made by this subsection shall apply to taxable years beginning after December 31st, 2025. Section 70414, certain post-secondary credentialing expenses treated as qualified higher education expenses for purposes of 529 accounts. A, in general, Section 529E3 is amended by adding at the end the following new subparagraph. C, certain post-secondary credentialing expenses. The term qualified higher education expenses includes qualified post-secondary credentialing expenses as defined in subsection F. B, qualified post-secondary credentialing expenses. Section 529 is amended by redesignating subsection F as subsection G and by inserting after subsection E the following new subsection. F, qualified post-secondary credentialing expenses. For purposes of this section, 1, in general, the term qualified post-secondary credentialing expenses means A, tuition, fees, books, supplies, equipment required for the enrollment or attendance of a designated beneficiary in recognized post-secondary credential program, or any other expense incurred in connection with an enrollment in or attendance at a recognized post-secondary credential program if such expense would, if incurred in connection with the enrollment or attendance at an eligible educational institution, be covered under subsection E3A. B, fees for testing if such testing is required to obtain or maintain a recognized post-secondary credential. And C, fees for continuing education if such education is required to maintain a recognized post-secondary credential. 2, recognized post-secondary credential program. The term recognized post-secondary credential program means any program to obtain a recognized post-secondary credential if A, such program is included on a state list prepared under Section 122D of the Workforce Innovation and Opportunity Act, 29 U.S.C. 3152D. B, such program is listed in the public directory of the Web-enabled approval management systems or the Veterans Benefits Administration's or successor directory such program. C, an examination developed or administered by an organization widely recognized as providing reputable credentials in the occupation is required to obtain or maintain such credential, and such organization recognizes such program as providing training or education which prepares individuals to take such examination. Or D, such program is identified by the Secretary after consultation with the Secretary of Labor as being a reputable program for obtaining a recognized post-secondary credential for purposes of this subparagraph. 3, recognized post-secondary credential. The term recognized post-secondary credential means A, a post-secondary employment credential that is industry recognized and is 1, any post-secondary employment credential issued by a program that is accredited by the Institute for Credentialing Excellence, the National Commission on Certifying Agencies, or the American National Standards Institute. 2, any post-secondary employment credential that is included in the Credentialing Opportunities online directory of credentialing programs or successor directory maintained by the Department of Defense or by any branch of the armed forces. Or 3, any post-secondary employment credential identified for purposes of this clause by the Secretary after consultation with the Secretary of Labor as being industry recognized. B, any certificate of completion of an apprenticeship that is registered and certified with the Secretary of Labor under the Act of August 16, 1937, commonly known as National Apprenticeship Act 50 Stat 664, Chapter 663, 29 U.S.C. 50. C, any occupational or professional license issued or recognized by a state or the federal government, and any certification that satisfies the condition for obtaining such a license. And D, any recognized post-secondary credential as defined in Section 352 of the Workforce Innovation and Opportunity Act, 29 U.S.C. 310252, provided through a program described in paragraph 2A. C, effective date. The amendments made by this section shall apply to the distributions made after the date of the enactment of this act. Section 70415, modification of excise tax on investment income of certain private colleges and universities. A, in general, Section 4968 is amended to read as follows. Section 4968, excise tax based on investment income of private colleges and universities. A, tax imposed. There is hereby imposed on each applicable educational institution for the taxable year a tax equal to the applicable percentage of the net investment income of such institution for the taxable year.
B, applicable percentage. For purposes of this section, the term applicable percentage means 1, 1.4% in the case of an institution with a student-adjusted endowment of at least $500,000 and not in excess of $750,000. 2, 4% in the case of an institution with a student-adjusted endowment in excess of $750,000 and not in excess of $2 million. And 3, 8% in the case of an institution with a student-adjusted endowment in excess of $2 million. C, applicable education institution. For purposes of this subchapter, the term applicable educational institution means an eligible educational institution as defined in Section 25AF2, 1, which had at least 3,000 tuition-paying students during the preceding taxable year, 2, more than 50% of the tuition-paying students of which are located in the United States, 3, the student-adjusted endowment of which is at least $500,000, and 4, which is not described in the first sentence of Section 51A2B related to state colleges and universities. D, student-adjusted endowment. For purposes of this section, the term student-adjusted endowment means, with respect to any institution for any taxable year, 1, the aggregate fair market value of the assets of such institution, determined as the end of the preceding taxable year, other than those assets which are used directly in carrying out the institution's exempt purpose, divided by 2, the number of students of such institution. Determination of number of students. For purposes of subsection C and D, the number of students of an institution, including for purposes of determining the number of students at a particular location, shall be based on the daily average number of full-time students attending such institution, with part-time students taken into account on a full-time student equivalent basis. F, net investment income. For purposes of this section, 1, in general, net investment income shall be determined under rules similar to the rules of section 4940C. 2, override of certain regulatory exceptions. A, student loan interest. Net investment income shall be determined by taking into account any interest income from a student loan made by the applicable educational institution or any related organization as gross investment income. B, federally subsidized royalty income. 1, in general, net investment income shall be determined by taking into account any federally subsidized royalty income as gross investment income. 2, federally subsidized royalty income for purposes of this subparagraph. I, in general, the student federally subsidized royalty income means any otherwise regulatory exempt royalty income if any federal funds were used in the research, development, or creation of the patent, copyright, or other intellectual or intangible property from which such royalty income is derived. 2, otherwise regulatory exempt royalty income. For purposes of this subparagraph, the term otherwise regulatory exempt royalty income means royalty income which, but for the subparagraph, would not be taken into account as gross investment income by reason of being derived from patents, copyrights, or other intellectual or intangible property which resulted from the work of students or faculty members in their capacities as such with the applicable educational institution. 3, federal funds. The term federal funds includes any grant made by and any payment made under any contract with any federal agency to the applicable educational institution, any related organization, or any student or faculty member referred to in subclause 2. G, assets and net investment income of related organizations. 1, in general, for purposes of subsections D and F, assets and net investment income of any related organization with respect to an educational institution shall be treated as assets and net investment income, respectively, of the educational institution, except that A, no such amount shall be taken into account with respect to more than one educational institution, and B, unless such organization is controlled by such institution or is described in section 509A3 with respect to such institution for the taxable year, assets and net investment income which are not intended or available for the use of benefit of the educational institution should not be taken into account. 2, related organization. For purposes of this subsection, the term related organization means with respect to any educational institution, any organization which A, controls or is controlled by such institution, B, is controlled by one or more persons which also control any institution, or C, is a supported organization as defined in section 509F3, or an organization described in section 509A3 during the taxable year with respect to such institution. H, regulations. The Secretary shall prescribe such regulations or other guidance as may be necessary to prevent avoidance of the tax under the section, including regulations or other guidance to prevent avoidance of such tax through restructuring of endowment funds or other arrangements designed to reduce or eliminate the value of net investment income or assets subject to the tax imposed by this section. B, requirement to report certain information with respect to application of excise tax based on investment income of private colleges and universities. Section 6033 is amended by redesignating subsection O as subsection P and inserting after subsection N the following new subsection. O, requirement to report certain information with respect to excise tax based on investment income of private colleges and universities. Each applicable educational institution described in section 4968C, which is subject to the requirements of subsection A, shall include on the return required under subsection A, 1, the number of tuition-paying students taken into account under subsection 4968C, and 2, the number of students of such institution determined under the rules of Section 4968E. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70416, expanding application of tax on excise compensation within tax-exempt organizations. A, in general. Section 4960C2 is amended to read as follows. 2, covered employee. For purposes of this section, the term covered employee means any employee of an applicable tax-exempt organization or any predecessor of such an organization, and any former employee of such an organization or predecessor who was such an employee during any taxable year beginning after December 31, 2016. B, effective date. The amendment made by subsection A shall apply to taxable years beginning after December 31, 2025. Subchapter C, permanent investments in community development. Section 70421, permanent renewal and enhancement of opportunity zones. A, decennial designations. 1, determination period. Section 1400Z-1C2B is amended by striking beginning of the date of the enactment of the Tax Cuts and Jobs Act and inserting beginning of the decennial determination date. 2, decennial determination date. Section 1400Z-1C2 is amended by adding at the end the following new subparagraph. C, decennial determination date. The term decennial determination date means 1, July 1, 2026, and 2, each July 1 of the year that is 10 years after the preceding decennial determination date under this subparagraph. 3, repeal of special rule for Puerto Rico. Section 1400Z-1B is amended by striking paragraph 3. 4, limitation on number of designations. Section 1400Z-1D1 is amended. A, in paragraph 1 by striking and subsection B3, and 2, by inserting during any period after the number of population census tracts in a state that may be designated as qualified opportunity zones under this section, and B, in paragraph 2, by inserting during any period before the period at the end. 5, effective dates. A, in general, except as provided in paragraph 2, the amendments made by this subsection shall take effect on the date of the enactment of this act. B, Puerto Rico, the amendment made by paragraph 3 shall take effect on December 31, 2026. B, qualifications for designations. 1, determination of low-income communities. Section 1400Z-1C is amended by striking all that precedes paragraph 2 and inserting the following. C, other definitions for purposes of this section. 1, low-income communities. The term low-income community means any population census tract if A, such population census tract has a median family income that 1, in the case of a population census tract not located within a metropolitan area, does not exceed 70% of the statewide median family income, or 2, in the case of a population census tract located within a metropolitan area does not exceed 70% of the metropolitan area median family income, or B, such population census tract has a 1, has a poverty rate of at least 20%, and 2, has a median family income that 1, in the case of a population census tract not located within a metropolitan area, does not exceed 125% of the statewide median family income, or 2, in the case of a population census tract located within a metropolitan area, does not exceed 125% of the metropolitan area median family income. 2, repeal of the rule for contiguous census tracts. Section 1400Z-1 is amended by striking subsection E and redesignating subsection F as subsection E. 3, period for which designation is in effect. Section 1400Z-1E, as redesignated by paragraph 2, is amended to read as follows. E, period for which designation is in effect. 1, in general, a designation as a qualified opportunity zone shall remain in effect for the period beginning on the applicable start date and ending on the day before the date that is 10 years after the applicable start date. 2, applicable start date. For purposes of this section, the term applicable start date means, with respect to any qualified opportunity zone designated under this section, the January 1 following the date on which such qualified opportunity zone was certified and designated by the Secretary under subsection B1B. 4, effective date. The amendments made by this subsection shall apply to areas designated under section 1400Z-1 of the Internal Revenue Code of 1986, after the date of the enactment of this act. C, application of special rules for capital gains. 1, repeal of sunset on election. Section 1400Z-2A2 is amended to read as follows. 2, election. No election may be made under paragraph 1 with respect to a sale or exchange of an election previously made with respect to such sale or exchange is in effect. 2, modification of rules for deferral of gain. Section 1400Z-2B is amended to read as follows. B, deferral of gain invested in opportunity zone property. 1, year of inclusion. Gain of which subsection A1B applies shall be included in gross income in the taxable year which includes the earlier of A, the date on which such investment is sold or exchanged, or B, the date which is 5 years after the date of investment in the qualified opportunity fund was made. 2, amount includable. A, in general, the amount of gain included in gross income under subsection A1B shall be the excess of 1, the lesser of the amount of gain excluded under subsection A1A, or the fair market value of the investment as determined as of the date described in paragraph 1 over 2, the taxpayer's base in the investment. B, determination of basis. 1, in general, except as otherwise provided in this subparagraph or subsection C, the taxpayer's base in the investment shall be 0. 2, increase for gain recognized under subsection A1B. The basis in the investment shall be increased by the amount of gain recognized by reason of subsection A1B with respect to such investment. 3, investments held for 5 years. 1, in general, in the case of any investment held for at least 5 years, the basis of such investment shall be increased by an equal amount to 10%, 30% in the case of any investment in a qualified rural opportunity fund, of the amount of gain deferred by reason of subsection A1A. 2, application of increase. For purposes of this subsection, any increase in basis under this clause shall be treated as occurring before the date described in paragraph 1B. C, qualified rural opportunity fund. For purposes of subparagraph B3, 1, qualified rural opportunity fund. The term qualified rural opportunity fund means a qualified opportunity fund that holds at least 90% of its assets in qualified opportunity zone property, which 1, is qualified opportunity zone business property, substantially all of the use of which during substantially all of the fund's holding period for such property was in a qualified opportunity zone comprised entirely of a rural area, or 2, is qualified opportunity zone stock or qualified opportunity zone partnership interest in a qualified opportunity zone business in which substantially all of the tangible property owned or leased is qualified opportunity zone business property described in subsection D3A1, and substantially all of the use of which is in a qualified opportunity zone comprised entirely of a rural area. For purposes of the preceding sentence, property held in the fund shall be measured under rules similar to the rules of subsection D1. 2, rural area. The term rural area means any area other than 1, a city or town that has a population of greater than 50,000 inhabitants, and 2, any urbanized area contiguous and adjacent to a city or town described in subclause 1. 3, special rule for investments held at least 10 years. Section 1400Z-2C is amended by striking makes an election under this clause and all that follows, and inserting makes an election under this subsection. The basis of such investment shall be equal to A. In the case of an investment sold before the date that is 30 years after the date of the investment, the fair market value of such investment on the date such investment is sold or exchanged, or B. In any other case, the fair market value of such investment on the date that is 30 years after the date of the investment. 4, termination of qualified opportunity zone property. A, qualified opportunity zone business property, section 1400Z-2D2D11 is amended by striking December 31, 2017, and inserting the applicable start date as defined in section 1400Z-1E2 with respect to the qualified opportunity zone described in subclause 3. B, qualified opportunity zone stock and partnership interest, section 1400Z-2D2 is amended 1 by striking December 31, 2017, each place it appears in subparagraphs B1.1 and C1, and inserting the applicable date, and 2 by adding at the end of the following new subparagraph E, applicable date. For purposes of this subparagraph, the term applicable date means with respect to any corporation or partnership which is a qualified opportunity zone business, the earliest date described in subparagraph D11 with respect to the qualified opportunity zone business property held by such qualified opportunity zone business. C, special rule for improvement of existing structure in rural areas. Section 1400Z-2 D2D2 is amended by inserting 50% of such adjusted basis in the case of property in a qualified opportunity zone comprised entirely of a rural area as defined in subsection B2C2 after the adjusted basis of such property. 5, effective dates. A, in general, except as otherwise provided in this paragraph, the amendments made in this subsection shall apply to amounts invested in qualified opportunity funds after December 31, 2026. B, acquisition of qualified opportunity zone property. The amendments made by subparagraphs A and B of paragraph 4 shall apply to property acquired after December 31, 2026. C, substantial improvement. The amendment made by paragraph 4C shall take effect on the date of the enactment of this act. D, information reported on qualified opportunity funds and qualified rural opportunity funds. 1, filing requirements for funds and investors. Subpart A of Part 3 of Subchapter A of Chapter 61 is amended by inserting after Section 6039J the following new sections. Section 6039K returns with respect to qualified opportunity funds and qualified rural opportunity funds. A, in general, every qualified opportunity fund shall file an annual return at such time and in such manner as the Secretary may prescribe, containing the information described in subsection B. B, information from qualified opportunity funds. The information described in this subsection is 1, the name, address, and taxpayer identification number of the qualified opportunity fund. 2, whether the qualified opportunity fund is organized as a corporation or a partnership. 3, the value of the total assets held by the qualified opportunity fund as of each date described in section 1400Z-2D1. 4, the value of all qualified opportunity zone property held by the qualified opportunity fund on such date with respect to each investment held by the qualified opportunity fund and qualified opportunity zone stock or qualified opportunity zone partnership interest. A, the name, address, and taxpayer identification number of the corporation in which such stock is held or the partnership in which such interest is held, as the case may be. B, each North American Industry Classification System, NAICS code that applies to the trades or businesses conducted by such corporation or partnership. C, the population census tract or population census tract in which the qualified opportunity zone business property of such corporation or partnership is located. D, the amount of the investment in such stock or partnership interest as of each date described in section 1400Z-2D1. E, the value of tangible property such as such corporation or partnership on each such date is owned by such corporation or partnership. F, the value of tangible property held by such corporation or partnership on each such date which is leased by such corporation or partnership. G, the approximate number of residential units for any real property held by such corporation or partnership. And H, the approximate average monthly number of full-time equivalent employees of such corporation or partnership for the year within numerical ranges identified by the Secretary or such other indication of the employment impact of such corporation or partnership as determined appropriate by the Secretary. 6, with respect to the items of qualified opportunity zone business property held by the qualified opportunity zone. A, the North American Industry Classification System, NAICS code that applies to the trade or businesses in which such property is held. B, the population census tract in which the property is located. C, whether the property is owned or leased. D, the aggregate value of the items of qualified opportunity zone property held by the qualified opportunity fund as of each date described in section 1400Z-2D1. And E, in the case of real property, the number of residential units, if any. 7, the approximate average monthly number of full-time equivalent employees for the year of the trades or businesses of the qualified opportunity fund in which qualified opportunity zone business property is held within numerical ranges identified by the Secretary or such other indication of the employment impact of such trades or businesses as determined appropriate by the Secretary. 8, with respect to each person who disposed of an investment in the qualified opportunity fund during the year. A, the name, address, and taxpayer identification number of such person. B, the date or dates on which the investment disposed was acquired. And C, the date or dates on which any such investment was disposed and the amount of the investment disposed, and 9, such other information as the Secretary may require. C, statement required to be furnished to investors. Every person required to make a return under subsection A shall furnish to each person whose name is required to be set forth in any such return by reason of subsection B8 at such time and in such manner as the Secretary may prescribe, a written statement showing 1, the name, address, and phone number of the information contact of the person required to make such a return, and 2, the information required to be shown on such return by reason of subsection B8 with respect to the person whose name is required to be so set forth. D, definitions. For purposes of this section, 1, in general, any person used in this section, which is also used in subchapter Z of Chapter 1, shall have the meaning given such term under such subchapter. 2, full-time equivalent employees. The term full-time equivalent employees means with respect to any month, the sum of the subs of A, the number of full-time employees as defined in section 4980HC4 for the month, plus B, the number of employees determined under rules similar to the rules of section 4980HC2E by dividing the aggregate number of hours of service of employees who are not full-time employees for the month by 120. E, application to qualified rural opportunity funds. Every qualified rural opportunity fund as defined in section 1400Z-2B2C shall file the annual return required under subsection A and the statements required under subsection C applied. 1, by substituting qualified rural opportunity for qualified opportunity each place it appears. 2, by substituting section 1400Z-2B2C for section 1400Z-2D1 of each place it appears, and 3, by treating any reference after the application of paragraph 1 to qualified rural opportunity zone stock, a qualified rural opportunity zone partnership interest, a qualified rural opportunity zone business, or qualified opportunity zone business property as stock, an interest, a business, or property respectively described in subclause 1 or 2, as the case may be, of section 1400Z 2B2C1, section 603L, information required from qualified opportunity zone businesses and qualified rural opportunity zone businesses. A, in general, every applicable qualified opportunity zone business shall furnish to the qualified opportunity fund described in subsection B a written statement at such time, in such manner, and setting forth such information as the Secretary may by regulations prescribed for purposes of enabling such qualified opportunity fund to meet the requirements of section 6039KB5. B, applicable qualified opportunity zone business. For purposes of subsection A, the term applicable qualified opportunity zone business means any qualified opportunity zone business, 1, which is a trade or business of a qualified opportunity fund, 2, in which a qualified opportunity fund holds qualified opportunity zone stock, or 3, in which a qualified opportunity fund holds a qualified opportunity zone partnership interest. C, other terms. Any term used in this section, which is also used in subchapter Z of Chapter 1, shall have the meaning given such term under such subchapter. D, application to qualified rural opportunity businesses. Every applicable qualified rural opportunity zone business as defined in subsection B, determined after application of the substitutions described in this sentence, shall furnish the written statement required under subsection A applied. 1, by substituting qualified rural opportunity for qualified opportunity each place it appears, and 2, by treating any reference after the application of paragraph 1 to qualified rural opportunity zone stock, a qualified rural opportunity zone partnership interest, or a qualified rural opportunity zone business as stock, an interest, or business respectively described in subclause 1 or 2, as the case may be, of section 1400Z-2B2C1. 2, penalties. A, in general. Part 2 of subchapter B of Chapter 68 is amended by inserting after section 6725 the following new section. Section 6726, failure to comply with information reporting requirements relating to qualified opportunity funds and qualified rural opportunity funds. A, in general, if any person required to file a return under section 6039K fails to file a complete and correct return under such section in the time and in the manner prescribed therefore, each person shall pay a penalty of $500 for each day during which such failure continues. B, limitation. 1, in general, the maximum penalty under this section on failures with respect to any one return shall not exceed $10,000. 2, large qualified opportunity funds. In the case of any failure described in subsection A with respect to a fund, the gross assets of which determined on this last day of the applicable year are in excess of $10 million, paragraph 1 shall be applied by substituting $50,000 for $10,000. C, penalty in cases of intentional disregard. If a failure described in subsection A is due to intentional disregard, then 1, subsection A shall be applied by substituting $2,500 for $500. 2, subsection B1 shall be applied by substituting $50,000 for $10,000. And 3, subsection B2 shall be applied by substituting $250,000 for $50,000. D, inflation adjustment. 1, in general, if in the case of any failure relating to a return acquired to be filed by a calendar year beginning after 2025, each of the dollar amounts in subsections A, B, and C shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under section 1F3 for the calendar year determined by substituting calendar year 2024 for calendar year 2016 in subparagraph A2 thereof. 2, rounding. A, in general, if the $500 amount in subsection A and C1 or the $2,500 amount in subsection C1 after being increased under paragraph 1 is not a multiple of $10, such dollar amount shall be rounded to the next lowest multiple of $10. B, asset threshold. If the $10 million amount in subsection B2 after being increased under paragraph 1 is not a multiple of $10,000, such paragraph amount shall be rounded to the next lowest multiple of $10,000. C, other dollar amounts. If any dollar amount in subsection B or C, other than any amount to which paragraph A or B applies, after being increased under paragraph 1, is not a multiple of $1,000, such dollar amount shall be rounded to the next lowest multiple of $1,000. B, information required to be sent to other taxpayers. Section 6724D2, as amended by the preceding provisions of this Act, is amended 1, by striking "or" at the end of the subparagraph LL, 2, by striking the period at the end of subparagraph MM and inserting a comma, and 3, by inserting after subparagraph MM the following new subparagraphs. NN, section 6039KC, related to disposition of qualified opportunity fund investments, or
Section 6093L, relating to information required from certain qualified opportunity zone businesses and qualified rural opportunity zone businesses. 3, electronic filing. Section 6011E is amended by adding at the end the following new paragraph. 8, qualified opportunity funds and qualified rural opportunity funds. Notwithstanding paragraphs 1 and 2, any return filed by a qualified opportunity fund or qualified rural opportunity funds under section 6039K shall be filed on magnetic media or other machine-readable form. 4, clerical amendments. A, the table of sections for subpart A of part 3 of subchapter A of chapter 61 is amended by inserting after the item relating to section 6039J the following new items. Sec 6039K, returns with respect to qualified opportunity funds and qualified rural opportunity funds. Sec 6039L, information required from qualified opportunity zone businesses and qualified rural opportunity zone businesses. B, the table of sections for part 2 of subchapter B of chapter 6A is amended by inserting after the item relating to section 6725 the following new item. Sec 6726, failure to comply with information reporting requirements relating to qualified opportunity funds and qualified rural opportunity funds. 5, effective date. The amendments made by this subsection shall apply to taxable years beginning after the date of the enactment of this Act. E, Secretary reporting of data on Opportunity Zone and Rural Opportunity Zone tax incentive. 1, in general, in addition to amounts otherwise available, there is appropriated out of any money in the Treasury not otherwise appropriated $15 million to remain available until September 30th, 2028 for necessary expenses of the Internal Revenue Service to make the reports described in paragraph 2. 2, reports. As soon as practical, after the date of the enactment of this Act and annually thereafter, the Secretary of the Treasury or the Secretary's delegate, referred to in this section as the Secretary, shall make publicly available a report on qualified opportunity funds. 3, information included. The report required under paragraph 2 shall include, to the extent available, the following information. A, the number of qualified opportunity funds. B, the aggregate dollar amount of assets held in qualified opportunity funds. C, the aggregate dollar amount of investments made by qualified opportunity funds in qualified opportunity fund property, stated separately for each North American Industry Classification System, NAICS code. D, the percentage of population census tracts designated as qualified opportunity zones that have received qualified opportunity fund investments. E, for each population census tract designated as a qualified opportunity zone, the approximate average monthly number of full-time equivalent employees of the qualified opportunity zone businesses in such qualified opportunity zone for the preceding 12-month period within numerical ranges identified by the Secretary, or such other indication of the employment impact of such qualified opportunity fund businesses as determined appropriate by the Secretary. F, the percentage of the total amount of investments made by qualified opportunity funds in I, qualified opportunity zone property, which is real property, and 2, other qualified opportunity zone property. G, for each population census tract, the aggregate approximate number of residential units resulting from investments made by qualified opportunity funds in real property. H, the aggregate dollar amount of investments made by qualified opportunity funds in each population census tract. 4, information. A, in general, beginning with the report submitted under paragraph 2 of the 6th year after the date of the enactment of this act, the Secretary shall include in such report the impacts and outcomes of a designation of a population census tract as a qualified opportunity zone as measured by economic indicators, such as job creation, poverty reduction, new business starts, and other metrics as determined by the Secretary. B, semi-decennial information. 1, in general, in the case of any report submitted under paragraph 2, in the 6th year of the 11th year after the date of the enactment of this act, the Secretary shall include the following information. I, 1, for population census tracts designated as a qualified opportunity zone, a comparison based on aggregate information of the factors listed in Clause 3 between the 5-year period ending on the date of the enactment of Public Law 11597 and the most recent 5-year period for which data is available. 2, for population census tracts designated as a qualified opportunity zone, a comparison based on aggregate information of the factors listed in Clause 3 for the most recent 5-year period for which data is available between such population census tracts and similar population census tracts that were not designated as a qualified opportunity zone. 2, control groups. For purposes of Clause 1, the Secretary may combine population census tracts into such groups as the Secretary determines appropriate for purposes of making comparisons. 3, factors listed. The factors listed in this clause are the following. 1, the unemployment rate. 2, the number of persons working in the population census tract, including the percentage of such persons who were not residents in the population census tract in the preceding year. 3, rates. 3, individual family and household poverty rates. 4, median family income of residents of the population census tract. 5, demographic information on residents of the population census tract, including age, income, education, race, and employment. 6, the average percentage of income of residents of the population census tract spent on rent annually. 7, the number of residences in the population census tract. 8, the rate of home ownership in the population census tract. 9, the average value of residential property in the population census tract. 10, the number of affordable housing units in the population census tract. 11, the number of new businesses started in the population census tract. 12, the distribution of employees in the population census tract by North American Industry Classification System, NAICS code. 5, protection of identifiable return information. In making reports required under this subsection, the Secretary A shall establish appropriate procedures to ensure that any amounts reported do not disclose taxpayer return information that can be associated with any particular taxpayer or competitive or proprietary information. And B, if necessary to protect taxpayer return information, may combine information required with respect to individual population census tracts into larger geographic areas. 6, definitions. Any term used in this subsection, which is also used in subchapter Z of Chapter 1 of the Internal Revenue Code of 1986, shall have the meaning given such term under such subchapter. 7, reports of qualified rural opportunity funds. The Secretary shall make publicly available with respect to qualified rural opportunity funds separate reports as required under this subsection applied. A, by substituting qualified rural opportunity for qualified opportunity each place it appears. B, by substituting a reference to this act for Public Law 11597, and C, by treating any reference after the application of subparagraph A to qualified rural opportunity zone stock, qualified rural opportunity zone partnership interest, qualified rural opportunity zone business, or qualified opportunity zone business property as stock interest, business or property respectively, described in subclause 1 or 2, as the case may be, of section 1400Z 2B 2CI of the Internal Revenue Code of 1986. Sec 70422, permanent enhancement of low-income housing tax credit. A, permanent state housing credit ceiling increase for low-income housing credit. 1, in general, section 42H3I is amended, A, by striking 2018, 2019, 2020, and 2021, and inserting beginning after December 31, 2025. B, by striking 1.125 and inserting 1.12, and C, by striking 2018, 2019, 2020, and 2021 in the heading inserting calendar years after 2025. 2, effective date. The amendments made by this subsection shall apply to calendar years beginning after December 31, 2025. B, tax-exempt bond financing requirement. 1, in general. Section 42H4 is amended by striking subparagraph B and inserting the following. B, special rule where a minimum percent of buildings is financed with tax-exempt bonds subject to volume cap. For purposes of subparagraph A, paragraph 1 shall not apply to any portion of the credit allowable under subsection A with respect to a building if I, 1, 50% of more of the aggregate basis of such building and the land on which the building is located is financed by one or more obligations described in subparagraph A, or I, 25% or more of the aggregate basis of such building and the land on which the building is located is financed by one or more obligations described in subparagraph A, and 2, one or more of the such obligations AA are part of an issue, the issue date of which is after December 31st, 2025, and BB provide the financing for not less than 5% of the aggregate basis of such building and the land on which the building is located. 2, effective date. A, in general. The amendment made by this subsection shall apply to buildings placed in service in taxable years beginning after December 31st, 2025. B, rehabilitation expenditures treated as separate new building. In the case of any building with respect to which any expenditures are treated as a separate new building under Section 42E of the Internal Revenue Code of 1986 for purposes of subparagraph A, both the existing building and the separate new building shall be treated as having been placed in service on the date such expenditures are treated as placed in service under Section 42E4 of such code. Sec 70423, permanent extension of new markets tax credit. A, in general. Section 45D F1H is amended by striking 4 for each of calendar years 2020 through 2025 and inserting 4 each calendar year after 2019. B, carryover of unused limitation. Section 45D F3 is amended. 1, by striking if the and inserting the following. A, in general. If the and. 2, B. 2, by striking the second sentence and inserting the following. B, limitation. No amount may be carried under subparagraph A to any calendar year after the 5th calendar year, after the calendar year in which the excess described in such subparagraph occurred. For purposes of this subparagraph, any excess described in subparagraph A with respect to any calendar year before 2026 shall be treated as occurring in calendar year 2025. C, effective date. The amendments made by this section shall apply to calendar years beginning after December 31st, 2025. Sec 70424, permanent and expanded reinstatement of partial deduction for charitable contributions of individuals who do not elect to itemize. A, in general. Section 170P is amended. 1, by striking $300, $600, and inserting $1,000, $2,000, and 2, by striking beginning in 2021. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Sec 70425, 0.5% floor on deduction of contributions made by individuals. A, in general. 1, in general. Paragraph 1 of Section 170B is amended by adding at the end the following new subparagraph. 1, 0.5% floor. Any charitable contribution otherwise allowable without regard to this subparagraph as a deduction under this section shall be allowed only to the extent that the aggregate of such contributions exceeds 0.5% of the taxpayer's contribution base for the taxable year. The preceding sentence shall be applied. 1, first, by taking into account charitable contributions to which subparagraph D applies to the extent thereof. 2, second, by taking into account charitable contributions to which subparagraph C applies to the extent thereof. 3, third, by taking into account charitable contributions to which subparagraph B applies to the extent thereof. 4, fourth, by taking into account charitable contributions to which subparagraph E applies to the extent thereof. B, fifth, by taking into account charitable contributions to which subparagraph A applies to the extent thereof, and sixth, by taking into account charitable contributions to which subparagraph G applies to the extent thereof. 2, application of carry forward. Paragraph 1 of Section 170D is amended by adding at the end the following new subparagraph. C, contributions disallowed by 0.5% floor carried forward only from years in which limitation is exceeded. 1, in general, in the case of any taxable year from which an excess is carried forward, determined without regard to this subparagraph under any carryover rule, the applicable carryover rule shall be applied by increasing the excess determined under such applicable carryover rule for the contribution year before the application of subparagraph B by the amount attributable to the charitable contributions to which such rule applies, which is not allowed as a deduction for the contribution year by reason of subsection B1I. 2, carryover rule. For purposes of this subparagraph, the term carryover rule means 1, subparagraph A of this paragraph, 2, subparagraphs C, 2, D, 2, E, 2, and G, 2 of subsection B, 1, and 3, the second sentence of subsection B, 1B. 3, applicable carryover rule. For purposes of this subparagraph, the term applicable carryover rule means any carryover rule applicable to charitable contributions which were, in whole or in part, not allowed as a deduction for the contribution year by reason of subsection B1I. 3, coordination with deduction for non-itemizers. Section 170P, as amended by this act, is further amended by inserting B1I after subsections B1G2. B, modification of limitation for cash contributions. 1, in general. Clause 1 of section 170B1G is amended to read as follows. 1, in general, for taxable years beginning after December 31st, 2017, any contribution of cash to an organization described in subparagraph A shall be allowed as a deduction under subsection A, to the extent that the aggregate of such contributions does not exceed the excess of I. 1, 60% of the taxpayer's contributions base for the taxable year over. 2, the aggregate amount of contributions taken into account under subparagraph A for such taxable year. 2, coordination with the other limitations. A, in general. Clause 3 of Section 170B1G is amended, 1, by striking subparagraphs A and B in the heading and inserting subparagraph A and. 2, in subclause 2 by striking and subparagraph B and all that follows through this subparagraph. B, other contributions. Subparagraph B of Section 170B1 is amended, 1, by striking to which subparagraph A, both places it appears, and inserting to which subparagraph A and G, and 2, in clause 2, by striking over the amount and all that follows through subparagraph C and inserting over. 1, the amount of charitable contributions allowable under subparagraph A determined without regard to subparagraph C and subparagraph G reduced by. 2, so much of the contributions taken into account under subparagraph G as does not exceed 10% of the taxpayer's contribution base. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Sec. 70426, 1% floor on deduction of charitable contributions made by corporations. A, in general. Section 170B2A is amended to read as follows. A, in general, any charitable contribution otherwise allowable without regard to this subparagraph as a deduction under this section for any taxable year other than any contribution to which subparagraph B or C applies shall be allowed only to the extent that the aggregate of such contributions, 1, exceeds 1% of the taxpayer's taxable income for the taxable year, and 2, does not exceed 10% of the taxpayer's taxable income for the taxable year. B, application of carry forward. Section 170D2 is amended to read as follows. 2, corporations. A, in general. Any charitable contribution taken into account under subsection B2A for any taxable year which is not allowed as a deduction by reason of clause 2 thereof shall be taken into account as a charitable contribution for the succeeding taxable year, except that for purposes of determining under this subparagraph whether such contribution is allowed in such succeeding taxable year, contributions in such succeeding taxable year determined without regard to this paragraph shall be taken into account under subsection B2A before any contribution taken into account by reason of this paragraph. B, 5-year carry forward. No charitable contribution may be carried forward under subparagraph A to any taxable year following the 5th taxable year after the taxable year in which the charitable contribution was first taken into account. For purposes of the preceding sentence, contributions shall be treated as allowed on a first-in, first-out basis. C, contributions disallowed by 1% floor carried forward only from years in which 10% limitation is exceeded. In the case of a taxable year from which a charitable contribution is carried forward under subparagraph A, determined without regard this subparagraph. Subparagraph A shall be applied by substituting clause 1 or 2 for clause 2. D, special rule for net operating loss carryovers. The amount of charitable contributions carried forward under subparagraph A shall be reduced to the extent that such carry forward would, but for this subparagraph, reduce taxable income as computed for purposes of the second sentence of section 172B2 and increase a net operating loss carryover under section 172 to a succeeding taxable year. C, conforming amendments. Subparagraphs B2 and C2 of section 170B2 are each amended by inserting other than subparagraph C thereof after subsection D2. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Sec. 70427, permanent increase in limitation on cover over of tax on distilled spirits. A, in general, paragraph 1 of section 7652F is amended to read as follows. 1, $13.25, or B, effective date. The amendment made by this section shall apply to distilled spirits brought into the United States after December 31st, 2025. Sec. 70428, nonprofit community development activities in remote native villages. A, in general, for purposes of subchapter F of Chapter 1 of the Internal Revenue Code of 1986, any activity substantially related to participation or investment in fisheries in the Bering Sea and Aleutian Islands, statistically in reporting areas as described in Figure 1 of Section 679 of Title 50, Code of Federal Regulations carried on by an entity identified in Section 305I-1D of the Magnuson-Stevens Fishery Conservation and Management Act, 16 Usk, 1855, I-1D, as in effect on the date of enactment of this section, shall be considered substantially related to the exercise or performance of the power constituting the basis of such entity's exemption under Section 501A of such code, if the conduct of such activity is in furtherance of one or more of the purposes specified in Section 305(1)(1)A of such act, as so in effect, for purposes of this paragraph, activities substantially related to participation of investment in fisheries, including the harvesting, processing, transportation, sales, and marketing of fish and fish products in the Bering Sea and Aleutian Islands, statistically and reporting areas. B, application to certain wholly owned subsidiaries. If the assets of a trade or business relating to an activity described in subsection A of any subsidiary wholly owned by an entity identified in Section 305(1)(1)D of the Magnuson-Stevens Fishery Conservation and Management Act, 16 U.S.C. 1855 I-1D, as in effect on the date of enactment of this section, are transferred to such entity, including in liquidation of such subsidiary not later than 18 months after the date of the enactment of this act. 1, no gain or income resulting from such transfer shall be recognized to either such subsidiary or such entity under such code, and 2, all income derived from such subsidiary from such transferred trade or business shall be exempt from taxation under such code. C, effective date. This section shall take effect on the date of the enactment of this act and shall remain effective during the existence of the Western Alaska Community Development Quota Program, established by Section 305(1)(1) of the Magnuson-Stevens Fishery Conservation and Management Act, 16 U.S.C. 1855(1)(1), as amended. Sec. 70429, adjustment of charitable deduction for certain expenses incurred in support of Native Alaskan subsistence whaling. In general, Section 170N1 of the Internal Revenue Code of 1986 is amended by striking $10,000 and inserting $50,000. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Sec. 70430, exception to percentage of completion method of accounting for certain residential construction contracts. A, in general. Section 460E is amended. 1, in paragraph 1. A, by striking home construction contract, both places it appears, and inserting residential construction contract, and B, by inserting determined by substituting 3-year for 2-year in subparagraph B1 for any residential construction contract, which is not a home construction contract after the requirements of clauses 1 and 2 of subparagraph B. 2, by striking paragraph 4 and redesignating paragraph 5 as paragraph 4 and 3 in subparagraph A of paragraph 4 as so redesignated by striking paragraph 4 and inserting paragraph 3. B, application of exception for purposes of alternative minimum tax. Section 568A3 is amended by striking any home construction contract as defined in Section 460E6 and inserting any residential construction contract as defined in Section 460E4. C, effective date. The amendments made by this section shall apply to contracts entered into after the date of the enactment of this act. Subchapter D, permanent investments in small business in rural America. Sec. 70431, expansion of qualified small business stock gain exclusion. A, phased increase in exclusion for gain from qualified small business stock, 1 in general. Section 1202A1 is amended to read as follows, 1 in general. In the case of a taxpayer other than a corporation, gross income shall not include A, except as provided in paragraphs 3 and 4, 50% of any gain from the sale or exchange of qualified small business stock acquired on or before the applicable date and held for more than 5 years, and B, the applicable percentage of any gain from the sale or exchange of qualified small business stock acquired after the applicable date and held for at least 3 years. 2, applicable percentages. Section 1202A is amended by adding at the end the following new paragraph. 5, applicable percentage. The applicable percentage under paragraph 1 shall be determined under the following table. Years stock held, applicable percentage. 3 years, 50%. 4 years, 75%. 5 years or more, 100%. 3, applicable data, acquisition date. Section 1202A, as amended by paragraph 2, is amended by adding at the end the following new paragraph. 6, applicable date, acquisition date for purposes of this section. A, applicable date. The term applicable date means the date of the enactment of this paragraph. B, acquisition date. In the case of any stock which would, but for this paragraph, be treated as having been acquired before, on, or after the applicable date, whichever is applicable, the acquisition date for purposes of this section shall be the first day on which such stock was held by the taxpayer determined after the application of section 1223. 4, continued treatment as not item of tax preferences. A, in general, section 57A7 is amended by striking an amount and inserting in the case of stock acquired on or before the date of the enactment of the Creating Small Business Jobs Act of 2010 an amount. B, conforming amendment, section 1202A4 is amended I by striking and at the end of subparagraph B and inserting a period and. 2, by striking subparagraph C. 5, other conforming amendments. A, paragraphs 3A and 4A of section 1202A are each amended by striking paragraph 1 and inserting paragraph 1A. B, paragraph 4A of section 1202A is amended by inserting and on or before the applicable date after 2010. C, sections 1202B2, 1202G2A, and 1202J1A are each amended by striking more than 5 years and inserting at least 3 years, more than 5 years in the case of stock acquired on or before the applicable date. 6, effective dates. A, in general, except as provided in subparagraph B, the amendments made by this subsection shall apply to taxable years beginning after the date of the enactment of this act. B, continued treatment as not item of tax preference. The amendments made by paragraph 4 shall take effect as if included in the enactment of section 2011 of the Creating Small Business Jobs Act of 2010. B, increase in per issuer limitation. 1, in general. Subparagraph A of section 1202B1 is amended to read as follows. A, the applicable dollar limit for the taxable year, or 2, applicable dollar limit, section 1202B is amended by adding at the end the following. 4, applicable dollar limit. For purposes of paragraph 1A, the applicable dollar limit for any taxable year with respect to eligible gain from one or more dispositions by a taxpayer of qualified business stock of a corporation in A, if such stock was acquired by the taxpayer on or before the applicable date, $10 million reduced by the aggregate amount of eligible gain taken into account by the taxpayer under subsection A for prior taxable years and attributable to dispositions of stock issued by such corporation and acquired by the taxpayer before, on, or after the applicable date, and B, if such stock was acquired by the taxpayer after the applicable date, $15 million reduced by the sum of 1, the aggregate amount of eligible gain taken into account by the taxpayer under subsection A for prior taxable years and attributable to dispositions of stock issued by such corporation and acquired by the taxpayer before, on, or after the applicable date plus. 2, the aggregate amount of eligible gain taken into account by the taxpayer under subsection A for the taxable year and attributable to dispositions of stock issued by such corporation and acquired by the taxpayer on or before the applicable date. 5, inflation adjustment. A, in general, in the case of any taxable year beginning after 2026, the $15 million amount in paragraph 4B shall be increased by an amount equal to 1, such dollar amount multiplied by 2, the cost of living adjustment determined under section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2025 for calendar year 2016 in subparagraph A2 thereof. If any increase under this subsection is not a multiple of $10,000, such increase shall be rounded to the nearest multiple of $10,000. B, no increase once limit reached. If for any taxable year, the eligible gain attributable to dispositions of stock issued by a corporation and acquired by the taxpayer after the applicable date exceeds the applicable dollar limit, then notwithstanding any increase under subparagraph A for any subsequent taxable year, the applicable dollar limit for such subsequent taxable year shall be 0. 3, separate return. Subparagraph A of section 1202B3 is amended to read as follows. A, separate returns. In the case of a separate return by a married individual for any taxable year, 1, paragraph 4A shall be applied by substituting $5 million for $10 million, and 2, paragraph 4B shall be applied by substituting 1/2 of the dollar amount in effect under such paragraph for the taxable year for the amount so in effect. 4, effective date. The amendments made by this subsection shall apply to taxable years beginning after the date of the enactment of this act. C, increase in limit in aggregate gross assets. 1, in general. Subparagraphs A and B of section 1202 D1 are each amended by striking $50 million and inserting $75 million. 2, inflation adjustment. Section 1202B is amended by adding at the end the following. 4, inflation adjustment. In the case of any taxable year beginning after 2026, the $75 million amounts in paragraph 1A and 1B shall each be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2025 for calendar year 2016 in subparagraph A2 thereof. If any increase under this paragraph is not a multiple of $10,000, such increase shall be rounded to the nearest multiple of $10,000. 3, effective date. The amendments made by this subsection shall apply to stock issued after the date of the enactment of this act. Section 704.32, repeal of revision to de minimis rules for third-party network transactions. A, reinstatement of exception for de minimis payments as in effect prior to enactment of American Rescue Plan Act of 2021. 1, in general. Section 6050WE is amended to read as follows. E, exception for de minimis payments by third-party settlement organizations. A third-party settlement organization shall be required to report any information under subsection A with respect to third-party network transactions of any participating payee only if, 1, the amount which would otherwise be reported under subsection A2 with respect to such transactions exceeds $20,000, and 2, the aggregate number of such transactions exceeds 200. 2, effective date. The amendment made by this subsection shall take effect as if included in section 9674 of the American Rescue Plan Act. B, application of de minimis rule for third-party network transactions to back up withholding. 1, in general. Section 3406B is amended by adding at the end the following new paragraph. 8, other reportable payments, including payments in settlement of third-party network transactions, only where aggregate transactions exceed reporting threshold for the calendar year. A, in general, any payment in settlement for a third-party network transaction required to be shown on a return required under Section 6050W, which is made during any calendar year, shall be treated as a reportable payment only if, 1, the aggregate number of transactions with respect to the participating payee during such calendar year exceeds the number of transactions specified in Section 6050WE2, and 2, the aggregate amount of transactions with respect to the participating payee under such calendar year exceeds the dollar amount specified in Section 6050 WE1 at the end of each such payment.
I got it. Thanks. B, exception if third-party network transactions made in prior year were reportable. Subparagraph A shall not apply with respect to payments to any participating payee during any calendar year if one or more payments is in settlement of third-party network transactions made by the payer to the participating payee during the preceding calendar year were reportable payments. 2, effective date. The amendment made by this subsection shall apply to calendar years beginning after December 31st, 2024. Section 70433, increase in threshold for requiring information reporting with respect to certain payees. In general, Section 6041A is amended by striking $600 and inserting $2,000. B, inflation adjustment. Section 6041 is amended by adding at the end of the following new subsection. H, inflation adjustment. In the case of any calendar year after 2026, the dollar amount in subsection A shall be increased by an amount equal to 1, such dollar amount multiplied by 2, the cost of living adjustment determined under Section 1F3 for such calendar year determined by substituting calendar year 2025 for calendar year 2016 in subparagraph A2 thereof. And any increase under the preceding sentence is not a multiple of $100. Such increase shall be rounded to the nearest multiple of $100. See application to reporting on remuneration for services. Section 6041AA2 is amended by striking is $600 or more and inserting equals or exceeds the dollar amount in effective for such calendar year under Section 6041A. D, application to backup withholding. Section 3406B6 is amended. 1, by striking $600 in subparagraph A and inserting the dollar amount in effect for such calendar year under Section 6041A, and 2, by striking only where aggregate for calendar year is $600 or more in the heading and inserting only where in excess of threshold. E, conforming amendments. 1, the heading of Section 6041A is amended by striking of $600 or more and inserting exceeding threshold. 2, Section 6041A is amending by striking taxable year and inserting calendar year. F, effective date. The amendments made by this section shall apply with respect to payments made after December 31st, 2025. Section 70434, treatment of certain qualified sound recording productions. A, election to treat costs as expenses. Section 181A1 is amended by striking qualified film or television production and any qualified live theatrical production and inserting qualified film or television production, any qualified live theatrical production, and any qualified sound recording production. B, dollar limitation. Section 181A2 is amended by adding to the end of the following new subparagraph. C, qualified sound recording production. Paragraph 1 shall not apply to so much of the aggregate cost of any qualified sound recording production or to so much of the aggregate cumulative costs of all such qualified sound recording productions in the taxable year as exceeds $150,000. C, no other deduction or amortization deduction allowable. Section 181B is amended by striking qualified film or television production or any qualified live theatrical production and inserting qualified film or television production, any qualified live theatrical production, or any qualified sound recording production. D, election. Section 181C1 is amended by striking qualified film or television production or any qualified live theatrical production and inserting qualified film or television production, any qualified live theatrical production, or any qualified sound recording production. E, qualified sound recording production defined. Section 181 is amended by redesignated subsections F and G as subsections G and H, respectively, and by inserting after subsection E the following new subsection. F, qualified sound recording production. For purposes of this section, the term qualified sound recording production means a sound recording as defined in Section 101 of Title 17 United States Code produced and recorded in the United States. F, application of termination. Section 181H as redesignated by Section E is amended by striking qualified film and television productions or qualified live theatrical productions and inserting qualified film and television productions, qualified live theatrical productions, or qualified sound recording productions. G, bonus depreciation. 1, qualified sound recording productions is qualified property. Section 168K2A1 is amended. A, by striking or at the end of the subsection clause 4, by inserting or at the end of subclause 5, and by inserting after subclause 5 the following. 6, which is qualified sound recording production as defined in subsection F of Section 181, for which a deduction would have been allowable under Section 181 without regard to subsections A2 and H of such section or this subsection, and B and subclauses 4 and 5 is so amended by striking without regard to subsections A2 and G, both places it appears in inserting without regard to subsections A2 and H. 2, production placed in service. Section 168K2H is amended by striking and at the end of Clause 1, by striking the period at the end of Clause 2 and inserting and by adding after Clause 2 the following. 3, a qualified sound recording production shall be considered to be placed in service at the time of initial release or broadcast. H, conforming amendments. 1, the heading of Section 181 is amended to read as follows, treatment of certain qualified productions. The table 2, the table of sections for Part 6 of subsection B of Chapter 1 is amended by striking the item relating to Section 181 and inserting the following new item. Section 181, treatment of certain qualified productions. 1, effective date. The amendments made by this section shall apply to productions commencing in taxable years ending after the date of the enactment of this Act. Section 70435, exclusion of interest on loans secured by rural or agricultural real property. A, in general, Part 3 of Subchapter B of Chapter 1, as amended by the preceding provisions of this Act, is amended by inserting after Section 139K the following new section. Section 139L, interest on loans secured by rural or agricultural real property. A, in general, gross income shall not include 25% of the interest received by a qualified lender on any qualified real estate loan. B, qualified lender. For purposes of this section, the term qualified lender means 1, any bank or savings association, the deposits of which are insured under the Federal Deposit Insurance Act, 12 U.S.C. 1811 at Sec. 2, any state or federally regulated insurance company. 3, any entity wholly owned directly or indirectly by a company that is treated as a bank holding company for purposes of Section 8 of the International Banking Act of 1978, 12 U.S.C. 3106. If A, such entity is organized, incorporated, or established under the laws of the United States or any state, and B, the principal place of business of such entity is in the United States, including any territory of the United States. 4, any entity wholly owned, directly or indirectly, by a company that is considered an insurance holding company under the laws of any state, if such entity satisfies the requirements described in subparagraphs A and B of paragraph 3. And 5, with respect to interest received on a qualified real estate loan secured by real estate described in subsection C3A, any federally chartered instrumentality of the United States established under Section 8.1A of the Farm Credit Act of 1971, 12 U.S.C. 2279AA-1A. C, qualified real estate loan. For purposes of this section, 1, in general, the term qualified real estate loan means any loan, A, secured by 1, rural or agricultural real estate, or 2, a leasehold mortgage with a status as a lien or on rural or agricultural real estate, B, made to any person other than a specified foreign entity as defined in Section 7701A51, and C, made after the date of the enactment of this section. For purposes of the preceding sentence, the determination of whether property securing such loan is rural or agricultural real estate shall be made as of the time the interest income on such loan is accrued. 2, refinancing. For purposes of subparagraphs A and C of paragraph 1, a loan shall not be treated as made after the date of the enactment of the section to the extent that the proceeds of such loan are used to refinance a loan which was made on or before the date of the enactment of the section, or in the case of any series of refinancings, the original loan was made on or before such date. 3, rural or agricultural real estate. The term rural or agricultural real estate means A, any real property which is substantially used for the production of one or more agricultural products, B, any real property which is substantially used in the trade of business or fishing or seafood processing, and C, any aquaculture facility. Such terms shall not include any property which is not located in a state or possession of the United States. 4, aquacultural facility. The term aquaculture facility means any land, structure, or other appurtenance that is used for aquaculture, including any hatchery, rearing pond, raceway, pen, or incubator. D, in coordination with Section 265. 25% of any qualified real estate loan shall be treated as an obligation described in Section 265A2, the interest on which is wholly exempt from the taxes imposed by the subtitle. B, clerical amendment. The table of sections for Part 3 of Subchapter B of Chapter 1 is amended by the preceding provisions of this Act is amended by inserting the following relating to Sections 139K, the following new item. Section 139L, interest on loans secured by rural or agricultural real property. C, effective date. The amendments made by this section shall apply to taxable years ending after the date of the enactment of this Act. Section 70436, reduction of transfer and manufacturing taxes for certain devices. A, transfer tax. Section 5811A is amended to read as follows. A, rate. There shall be levied, collected, and paid on firearms transferred tax at the rate of $200 for each firearm transferred in the case of a machine gun or destructive device, and $0 for any firearm transferred which is not described in paragraph 1. B, making tax. Section 5821A is amended to read as follows. A, rate. There shall be levied, collected, and paid upon the making of a firearm a tax at the rate of $200 for each firearm made in the case of a machine gun or destructive device, and $0 for any firearm made which is not described in paragraph 1. C, conforming amendment. Section 4182A is amended by adding at the end of the following. For purposes of preceding sentence, any firearm described in Section 5811A2 shall be deemed to be a firearm on which the tax provided by Section 5811 has been paid. D, effective date. The amendments made by this section shall apply to calendar quarters beginning more than 90 days after the date of the enactment of this Act. Section 70437, treatment of capital gains from the sale of certain farmland property. A, in general, Part 4 of Subchapter 0 of Chapter 1 is amended by redesignating Section 1062 as Section 1063 and by inserting after Section 1061 the following new section. Section 1062, gain from the sale or exchange of qualified farmland property to qualified farmers. A, election to pay tax in installments. In the case of gain from the sale or exchange of qualified farmland property to a qualified farmer, At the election of the taxpayer, the portion of the net income tax of such taxpayer for the taxable year or the sale or exchange which is equal to the applicable net tax liability shall be paid in 4 equal installments. B, rules relating to installment payments. 1, date for payment of installments. If an election is made under subsection A, the first installment shall be paid on the due date determined by without regard to any extension of time for filing the return for the return of tax for the taxable year in which the sale or exchange occurs, and each succeeding installment shall be paid on the due date as so determined for the return of tax for the taxable year following the taxable year with respect to which the preceding installment was made. 2, acceleration of payment. A, in general, if there is an addition to tax for failure to timely pay any installment required under this section, then the unpaid portion of all remaining installments shall be due on the date of such failure. B, individuals. In the case of an individual, if the individual dies, then the unpaid portion of all remaining installments shall be paid on the due date for the return of the tax for the taxable year in which the taxpayer dies. C, corporations. In the case of a taxpayer which is a C corporation, trust, or estate, if there is a liquidation or sale of substantially all the assets of the taxpayer, including a Title 11 or similar case, a cessation of businesses by the taxpayer in the case of C corporation or any similar circumstance, then the unpaid portion of all remaining installments shall be due on the date of such event, or in the case of a Title 11 or similar case, the day before the petition is filed. The preceding sentence shall not apply to the sale of substantially all the assets of a taxpayer to a buyer, and such buyer enters into an agreement with the secretary under which such buyer is liable for the remaining installments due under this subsection in the same manner as such if such buyer were the taxpayer. 3, proration of deficiency to installments. If an election is made under subsection A to pay the applicable net tax liability installments and a deficiency has been assessed with respect to such applicable net tax liability, the deficiency shall be prorated to the installments payable under subsection A. The part of the deficiency so prorated to any installment, the date for payment of which has not arrived, shall be collected at the same time as and as part of such installment. The part of the deficiency so prorated to any installment, the date for payment of which has arrived, shall be paid upon the notice and demand from the secretary. This section shall not apply if the deficiency is due to negligence, to intentional disregard of rules and regulations, or to fraud with intent to evade tax. C, election. 1, in general, any election under subsection A shall be made not later than the due date for the return of the tax for the taxable year described in subsection A. 2, partnerships and S corporations. In the case of a sale or exchange described in subsection A by a partnership or S corporation, the election under subsection A shall be made at the partner or shareholder level. The secretary may prescribe such regulations or other guidance as necessary to carry out the purposes of this paragraph. D, definitions. For purposes of this section, 1, applicable net tax liability. A, in general, the applicable net tax liability with respect to the sale or exchange of any property described in subsection A is the excessive, if any, of 1, such taxpayer's net income tax for the taxable year, or 2, such taxpayer's net income tax for such taxable year determined without regard to any gain recognized from the sale or exchange of such property. B, net income tax. The term net income tax means the regular tax liability reduced by the credits allowed under subparts A, B, and D of Part 4 of Subchapter A. 2, qualified farmland property. A, in general, the term qualified farmland property means real property located in the United States, one has been used by the taxpayer as a farm or for farming purposes, or 2, leased by the taxpayer to a qualified farm for farming purposes during substantially all of the 10-year period ending on the date of the qualified sale or exchange, and 2, which is subject to a covenant or other legally enforceable restriction which prohibits the use of such property other than as a farm for farming purposes for any period before the date that is 10 years after the date of the sale or exchange described in subsection A. For purposes of Clause 1, property which is used or leased by a partnership or S corporation in a manner described in such clause shall be treated as used or leased in such manner by each person who holds a direct or indirect interest in such partnership or S corporation. B, farming purposes. The term farm and farming purposes have the respective meanings given such terms under Section 2032AE. 3, qualified farmer. The term qualified farmer means any individual who is actively engaging in farming within the meaning of subsections B and C of Section 1001 of the Food Security Act of 1986, 7 U.S.C. 1308-1B and C. E, return requirement. A taxpayer making an election under subsection A shall include the return for the taxable year of the sale or exchange described in subsection A, a copy of the covenant or other legally enforceable restriction described in subsection D2A2. B, clerical amendment. The table of sections for Part 4 of Subchapter O of Chapter 1 is amended by redesignating the item relating to Section 1062 as relating to Section 1063, and by inserting after the item relating to Section 1061 the following new item. Section 1062 came from the sale or exchange of qualified farmland property to qualified farmers. C, effective date. The amendments made by this section shall apply to sales or exchanges in taxable years beginning after the date of the enactment of this act, section 70438. Extension of rules for treatment of certain disaster-related personal casualty losses. For purposes applying section 304B of the Taxpayer Certainty and Disaster Tax Relief Act of 2022, Division EE of Public Law 116-260, section 301 of such act shall be applied by substituting the date of the enactment of this section for the date of the enactment of this act, each place it appears. Chapter 5, Ending Green New Deal Spending, Promoting America First Energy and Other Reforms. Subchapter A, Termination of Green New Deal Subsidies. Section 70501, Termination of Previously Owned Clean Vehicle Credit. Section 25EG is amended by striking December 31st, 2032 and inserting September 30th, 2025. Section 70502, Termination of Clean Vehicle Credit. A, in general, Section 30DH is amended by striking placed in service after December 31st, 2032, and inserting acquired after December 30th, 2025. B, conforming amendment, Section 30DE is amended 1 in paragraph 1B, A in clause 3 by inserting and after the comma at the end, B in clause 4 by striking and inserting period, and C by striking clause 5, and in 2 in paragraph 2B, A in clause 2 by inserting and after the comma at the end, B in clause 3 by striking the comma at the end and inserting period, and C by striking clauses 4 through 6. Section 70503, Termination of Qualified Commercial Clean Vehicle Credit. Section 45WG is amended by striking December 31st, 2032 and inserting September 30th, 2025. Section 70504, Termination of Alternative Fuel Vehicle Refueling Property Credit. Section 30CI is amended by striking December 31st, 2032 and inserting June 30th, 2026. Section 70505, Termination of Energy Efficient Home Improvement Credit. A, in general, Section 25CH is amended by striking place in service and all that follows through December 31st, 2032 and inserting place in service after December 31st, 2025. B, conforming amendment, Section 25CD2C is amended to read as follows. C, any oil furnace or hot water boiler which, 1, meets or exceeds 2021 Energy Star efficiency criteria, and 2, is rated by the manufacturer for use with fuel blends, at least 20% of the volume of which consists of an eligible fuel. Section 70506, Termination of Residential Clean Energy Credit. A, in general, Section 25DH is amended by striking to property placed in service after December 31st, 2034, and inserting with respect to any expenditures made after December 31st, 2025. B, conforming amendment, Section 25DG is amended. 1, in paragraph 2 by inserting and after the comma at the end. 2, in paragraph 3 by striking and before January 1st, 2033, 30%, and inserting 30%. And 3, by striking paragraphs 4 and 5. Section 70507, Termination of Energy Efficient Commercial Building Deduction. Section 179D is amended by adding at the end of the following new subsection. 1, termination. The section shall not apply with respect to property, the construction of which begins after June 30th, 2026. Section 70508, Termination of New Energy Efficient Home Credit. Section 45LH is amended by striking December 31st, 2032 and inserting June 30th, 2026. Section 70509, Termination of Cost Recovery for Energy Property and Qualified Clean Energy Facilities Property and Technology. A, Energy Property, Section 168E3B6, as amended by Section 13703 of Public Law 117-169, is amended 1 by striking subclause 1 and 2, by redesignating subclauses 2 and 3 as subclauses 1 and 2, respectively. B, Qualified Clean Energy Facilities Property and Technology, Section 168E3B, as amended by Section 13703 of Public Law 117-169, and by subsection A is amended 1 and clause 6-2 by adding and at the end, 2 in clause 7 by striking and inserting a period, and 3 by striking clause 8. C, effective dates. 1, energy property. The amendments made by subsection A shall apply to the property of construction of which begins after December 30th, 2024. 2, qualifying clean energy facilities, property, and technology. The amendments made by subsection B shall apply to property placed in service after the date of enactment of this act. Section 70501, modifications of zero-emission nuclear power production credit. 2, restrictions relating to prohibited foreign entities. Section 45 UC is amended by adding at the end of the following new paragraph 3, restrictions relating to prohibited foreign entities. A, in general, no credit shall be determined under subsection A for any taxable year beginning after the date of enactment of this paragraph if the taxpayer is a specified foreign entity as defined in Section 7701A51B. B, other prohibited foreign entities. No credit shall be determined under subsection A for any taxable year beginning after the date, which is 2 years after the date of enactment of this paragraph, if the taxpayer is a foreign influence entity as defined in section 7701A51D without regard to clause 1, 2 thereof. B, prohibition with respect to nuclear power facilities using nuclear fuel-producing covered nations or by covered entities. Section 45U is amended by subsection A of this section is amended 1 and subsection B1A by redesignating subparagraphs B and C as subparagraphs C and D respectively, and B by inserting after subparagraph A the following new subparagraph B, which satisfies the requirement determined in subsection C4 and 2 in subsection C by adding at the end of the following new paragraph 4 restrictions relating to use of certain imported nuclear fuel. A, in general, for any taxable year, the requirements described in this paragraph with respect to any nuclear facility are that 1, with respect to any nuclear fuel used by such facility during such taxable year, such fuel was not 1, produced in a covered nation or by a covered entity, 2, exchanged with, traded for, or substituted for nuclear fuel described in subclause 1, or 3, otherwise obtained in lieu of nuclear fuel described in subclause 1, in a manner which is designed to circumvent the purposes of this paragraph. And 2, the taxpayer shall certify to the Secretariat at such time in such form and manner as the Secretary may prescribe that any fuel used by such facility during such taxable year complies with the requirements described in clause 1. B, exception, the requirements described in subparagraph A shall not apply with respect to any nuclear fuel which was acquired by the taxpayer pursuant to a binding written contract in effect before January 1st, 2023, and which was not modified in any material respect on or after such date. See other definitions in this paragraph. 1, covered entity. The term covered entity means any entity organized under the laws of or otherwise subject to the jurisdiction of the government of the covered nation. 2, covered nation. The term covered nation has the same meaning given such term in section 4872F of Title 10 United States Code. C, effective dates. 1, restrictions relating to prohibited foreign entities. The amendments made by subsection A shall apply to taxable years beginning after the date of enactment of this Act. 2, restrictions relating to use of certain imported nuclear fuel. The amendments made by subsection B shall apply to taxable years beginning after December 31st, 2027. Section 70511, termination of clean hydrogen production credit. Section 45 VC3C is amended by striking January 1st, 2033 and inserting January 1st, 2028. Section 70512, termination and restrictions of clean electricity production credit. A, termination for wind and solar facility. Section 45YD is amended 1 in paragraph 1 by striking the amount of and inserting subject to paragraph 4 the amount of, and 2 by striking paragraph 3 and inserting the following new paragraphs. 3, applicable year. For purposes of the subsection, the term applicable year means calendar year 2032 for termination for wind and solar facilities. A, in general, this section shall not apply with respect to any applicable facility placed in service after December 31st, 2037. B, applicable facility. For purposes of this paragraph, the term applicable facility means a qualified facility which 1, uses wind to produce electricity, which means within the meaning of such terms as used in section 45D1 is determined without regard to any requirement under such section with respect to the date on which construction of property begins, or 2, uses solar energy to produce electricity within the meaning of such terms is used in section 45D4 as determined without regard to any requirement under such section with respect to the date on which construction of property begins. B, restrictions relating to prohibited foreign entities. Section 45Y is amended once in subsection B1 by adding at the end of the following new subparagraph. E, material assistance from prohibited foreign entities. The term qualified facility shall not include any facility for which construction begins after December 31st, 2025, or in the case of applicable facility as defined in subsection D4B after June 16, 2025. If the construction of such facility includes any material assistance from a prohibited foreign entity as defined in section 7701A52. And 2, in subsection G, by adding at the end of the following new paragraphs, 13 restrictions relating to prohibited foreign entities. In general, no credit shall be determined under subsection A for any taxable year if the taxpayer is 1, a specified foreign entity as defined in section 7701A51B, or 2, a foreign influence entity as defined in section 7701A51D without regard to clause 1, 2 thereof. B, effective control in the case of a taxpayer for which section 7701A51D 1.2 is determined to apply for any taxable year. No credit shall be determined under subsection A for such taxable year if such determination relates to a qualified facility described in section B1. See definitions relating to prohibited foreign entities. Section 7701A is amended by adding at the end the following new paragraphs. 51, prohibited foreign entity. A, in general. 1, definition. The term prohibited foreign entity means specified foreign entity or a foreign influence entity. 2, determination. 1, in general, subject to subclause 2. For any taxable year, the determination as to whether any entity is a specified foreign entity or a foreign influence entity shall be made as of the last day of such taxable year. 2, initial taxable year. For purposes of the first taxable year beginning after the date of enactment of this paragraph, the determination as to whether an entity is a specified foreign entity described in clauses 1 through 4, subparagraph B, shall be made at the first day of the such taxable year. B, specified foreign entity. For purposes of this paragraph, the term specified foreign entity means 1. A foreign entity of concern described in subparagraph A, B, D, or E of section 99018 of the William M. Mack Thornberry National Defense Authorization Act for fiscal year 2021, Public Law 116-283, 15 U.S.C. 4651. 2. An entity identified as a Chinese military company operating in the United States in accordance with Section 1260H of the William M. Mack Thornberry National Defense Authorization Act for fiscal year 2021, Public Law 116-283, 10 U.S.C. 113, note. 3. An entity included on a list required by Clause 1, 2, 4, or 5 of Section 2D, 2B of Public Law 117-78, 135 Stat 1527, foreign entity specified under Section 154B of the National Defense Authorization Act for fiscal year 2024, Public Law 118-31, 10 U.S.C. No Prec 4651, or 5, a foreign controlled entity. C, foreign controlled entity. For purposes of subparagraph B, the term foreign controlled entity means 1, the government, including any level of government below the national level of a covered nation. 2, an agency or instrumentality of a government described in Clause 1. 3, a person who is a citizen or national of a covered nation, provided that such person is not an individual who is a citizen, national, or lawful permanent resident of the United States. 4, an entity or qualified business unit as defined in Section 989A, incorporated or organized under the laws of or having its principal place of business in a covered nation. Or 5, an entity including subsidiary entities controlled as determined under subparagraph G by an entity described in Clause 1, 2, 3, or 4. D, foreign influence entity. 1, in general, for purposes of subparagraph A, the term foreign influence entity means an entity 1, with respect to which, during the taxable year AA, a specified foreign entity that has direct authority to appoint a covered officer of such entity, BB, a single specified foreign entity owns at least 25% of such entity, CC, one or more specified foreign entities own in the aggregate at least 40% of such entity, or DD, at least 15% of the debt of such entity has been issued in the aggregate to one or more specified foreign entities. Or 2, which, during the previous taxable year, made a payment to a specified foreign entity pursuant to a contract agreement or other arrangement, which entity, such specified foreign entity or an entity related to such specified foreign entity, exercised effective control over AA, any qualified facility or energy store, or technology of the taxpayer, any person related to the taxpayer, or BB, with respect to any eligible component produced by the taxpayer, or any person related to the taxpayer. AA, the extraction, processing, or recycling of any applicable critical mineral, or BB, the production of any eligible component which is not an applicable critical mineral. 2, effective control. 1, in general. AA, general rule, subject to subclause 2, for purposes of clause 1, 2. The term effective control means one or more agreements or arrangements similar to those described in subclauses 2 and 3, which provide one or more contractual counterparties of a taxpayer with specified authority over key aspects of the production of eligible components, energy generation, in a qualified facility or any storage which are not included in the measure of control through authority, ownership, or debt, held which are described in clause 1.1. BB, guidance. The Secretary shall issue such guidance as is necessary to carry out the purposes of this clause, including the establishment of rules to prevent entities from evading, circumventing, or abusing the applicable application of restrictions described in subparagraph C and subclauses 2 and 3 of this subclause, through a contract, agreement, or other arrangement. 2, application of rules prior to issuance of guidance during any period prior to the date of the guidance described in subparagraph clause 1B is issued by the Secretary. For purposes of clause 1.2, the term effective control means the unrestricted contractual right of a contractual counterparty to AA determine the quantity or timing of production of an eligible component produced by the taxpayer. BB, determine the amount of timing of activities related to the production of electricity undertaken of a qualified facility of the taxpayer, the storage of electrical energy, and the energy storage technology of the taxpayer. CC, determine the entity may purchase or use the output of a production unit of the taxpayer that produces eligible components. DD, determine which entity shall produce or use the output of a qualified facility of the taxpayer.
Restrict access to data critical to production or storage of energy undertaken at a qualified facility of the taxpayer or to the site of the production or any part of a qualified facility or energy storage technology of the taxpayer to the personnel or agents of such contractual counterparty, or FF, on an exclusive basis, maintain, repair, or operate any plant or equipment which is necessary to the production by the taxpayer of eligible components or electricity. 3, licensing and other agreements. AA, in general, in addition to subclause 2 for purposes of clause 1, 2, the term effective control means with respect to a licensing agreement for the provision of intellectual property or any other contract agreement or any other arrangement entered into with a contractual counterparty which is related to such licensing agreement and to a qualified facility, energy storage technology, or the production of an eligible component, any of the following. AA, a contractual right retained by the contractual counterparty to specify or otherwise direct one or more sources of components, subcomponents, or applicable critical minerals utilized in a qualified facility, energy storage technology, or the production of an eligible component. BB, a contractual right retained by the contractual counterparty to correct the operation of any qualified facility, any energy storage technology, or any production unit that produces an eligible component. CC, a contractual right retained by the contractual counterparty to limit the taxpayer's utilization of intellectual property related to the operation of a qualified facility or energy storage technology, or in the production of an eligible component. DD, a contractual right retained by the contractual counterparty to receive royalties under the licensing agreement or any similar agreement, or payments under any related agreement beyond the 10th year of the agreement, including modifications or extensions thereof. EE, a contractual right retained by the contractual counterparty to direct or otherwise require the taxpayer to enter into an agreement for the provision of services for a duration longer than 2 years, including any modifications or extensions thereof. FF, such contract, agreement, or any other arrangement does not provide the licensee with all the technical data, information, and know-how necessary to enable the licensee to produce the eligible component or component subject to the contract, agreement, or other arrangement without further involvement from the contractual counterparty or a specified foreign entity. GG, such contract, agreement, or other arrangement was entered into or modified on or after June 16, 2025. BB, exception. AA, in general. Item AA shall not apply in case of a bona fide purchase or sale of intellectual property. BB, bona fide purchase or sale. For purposes of an item AA, any purchase or sale of intellectual property where the agreement provides that ownership of an intellectual property reverts to the contractual counterparty after a period of time shall not be considered a bona fide purchase or sale. 4, persons related to the taxpayer. For purposes of subclauses 1, 2, and 3, the term taxpayer shall include any person related to the taxpayer. 5, contractual counterparty. For purposes of this clause, the term contractual counterparty means an entity with the taxpayer has entered into a contract, agreement, or other arrangement. 3, guidance. No later than December 31st, 2026, the Secretary shall issue such guidance as is necessary to carry out the purposes of the subparagraph, including establishment of rules to prevent entities from evading, circumventing, or abusing the application of the restrictions against impermissible technology licensing with specified foreign entities, such as through temporary transfers of intellectual property, retention by a specified foreign entity of a reversionary interest in transferred intellectual property or otherwise. E, publicly traded entities. 1, in general. 1, non-application of certain foreign-controlled entity rules. Subparagraph C5 shall not apply in the case of any entity or securities of which are regularly traded on AA, a national securities exchange which is registered with the Securities and Exchange Commission. BB, the national market system established pursuant to Section 11A of the Securities Exchange Act of 1934. Or CC, any other exchange or other market which the Secretary has determined in a guidance issued under Section 1296E1A2 has rules adequate to carry out the purposes of Part 6 of Subchapter P of Chapter 1 of Subtitle A. 2, non-application of certain foreign influence entity rules. Subparagraph D1(1) shall not apply in the case of any entity, AA, the securities of which are regularly traded in a manner described in subclause 1, or BB, for which not less than 80% of the entity's securities of such entity are owned directly or indirectly by an entity which is described in an item AA. 3, exclusion of exchanges on or markets covered in nations. Subclause 1 CC shall not apply with respect to any exchange or market which AA is incorporated or organized under the laws of a covered nation, or BB has its principal place of business in a covered nation. 2, additional foreign controlled entity requirements for publicly traded companies. In the case of an entity described in Clause 1.1, such entity shall be deemed to be a foreign controlled entity under subparagraph C5 if such entity is controlled as determined under subparagraph G by 1 or more specified foreign entities as determined without regard to subparagraph B5 that are each required to report their beneficial ownership pursuant to a rule described in Clause 3.1BB, or 2, one or more foreign controlled entities as determined without regard to subparagraph C5 that are each required to report their beneficial ownership pursuant to a rule described in such clause. 3, additional foreign influence entity requirements for publicly traded companies. In the case of an entity described in Clause 1.2, such entity shall be deemed to be a foreign influence entity under subparagraph D1.1 if 1, during the taxable year, AA, a specific foreign entity, has the authority to appoint a covered officer of such entity, BB, a single specified foreign entity required to report its beneficial ownership under Rule 13D3 of the Securities and Exchange Act of 1934, or in the case of an exchange or market described in Clause 1.1cc, an equivalent rule owns not less than 25% of such entity, or CC, one or more specified foreign entities that are each required to report their beneficial ownership under Rule 13D3 of the Securities and Exchange Act of 1934, own in the aggregate not less than 40% of such entity, or 2, such entity has issued debt as a part of an original issuance in excess of 15% of its publicly traded debt to one or more specified foreign entities. F, covered officer. For the purposes of this paragraph, the term covered officer means with respect to an entity, 1, a member of the board of directors, board of supervisors, or equivalent governing body. 2, an executive level officer, including the president, chief executive officer, chief operating officer, chief financial officer, general counsel, or senior vice president. Or 3, an individual having powers or responsibilities similar to those of officers or members described in Clause 1 or 2. G, determination of control. For purposes of subparagraph C5, the term control means 1, in the case of a corporation, ownership by vote or value of more than 50% of the stock in such corporation. 2, in the case of a partnership, ownership of more than 50% of the profits, interest, or capital interest in such partnership. Or 3, in any other case, ownership or more than 50% of the beneficial interest in the entity. H, determination of ownership. For purposes of this section, Section 318A2 shall not apply for purposes of determining ownership of stock in a corporation. Similar principles shall apply for purposes of determining ownership of interest of any other entity. 1, for any other definitions, for purposes of the paragraph, 1, applicable control mineral. The term applicable control mineral has the same meaning given such term under Section 45X C6. 2, covered nation. The term covered nation has the same meaning given such term under Section 4872F2 of Title 10 United States Code. 3, eligible component. The term eligible component has the same meaning given such term under Section 45XC1. 4, energy storage technology. The term energy storage technology has the same meaning given such term under Section 48EC2. 5, qualified facility. The term qualified facility means 1, qualified facility as defined in Section 45YB1, and 2, a qualified facility as defined in Section 48EB3. 6, related. The term related shall have the same meaning given in such term under Sections 267B and 707B. J, beginning of construction. For purposes of applying any provision under this paragraph, the beginning of construction with respect to any property shall be determined pursuant to rules similar to the rules under Internal Revenue Service Notice 2013-29 and Internal Revenue Service Notice 2018-59, as well as any subsequently issued guidance clarifying, modifying, or updating such notice, as in effect on January 1st, 2025. K, regulations and guidance. The Secretary may prescribe such regulations and guidance as may be necessary or appropriate to carry out the provisions of this paragraph, including rules to prevent the circumvention of any rules or restrictions with respect to prohibited foreign entities. 52, material assistance from a prohibited foreign entity. A, in general, the term material assistance from a prohibited foreign entity means 1, with respect to any qualified facility or energy storage technology, a material assistance cost ratio which is less than the threshold percentage applicable under subparagraph B, or 2, with respect to any facility which produces eligible components, a material assistance cost ratio with which is less than the threshold percentage applicable under subparagraph C. B, threshold percentage for qualified facilities and energy storage technology. For purposes of subparagraph A1, the threshold percentage shall be 1 in the case of a qualified facility, the construction of which begins 1 after June 16, 2025, and before January 1st, 2026, 37.5%. 2, during calendar year 2026, 40%. 3, during calendar year 2027, 45%. 4, under calendar year 2028, 50%, 5, during calendar year 2029, 55%, and 6, after December 31st, 2029, 60%, and 2, in the case of energy storage technology, the construction of which begins 1, during calendar year 2026, 55%. 2, during calendar year 2027, 60%. 3, during calendar year 2028, 65%. 4, during calendar year 2029, 70%, and 5, after December 31st, 2029, 75%. C, threshold percentage for eligible components. One, in general, for purposes of subparagraph A2, the threshold percentage shall be 1 in the case of any solar energy component such term is defined in section 45XC3A, which is sold. AA, during calendar year 2026, 50%. BB, during calendar year 2027, 60%. CC, during calendar year 2028, 70%. DD, during calendar year 2029, 80%. And EE, after December 31st, 2029, 85%. 2, in the case of any wind energy component as such term is defined in section 45X C4A, which is sold. AA, during calendar year 2026, 85%, and BB, during calendar year 2027, 90%. 3, in the case of any inverter described in subparagraphs B through G of section 45XC2, which is sold. AA, during calendar year 2026, 50%. BB, during calendar year 2027, 55%. CC, during calendar year 2028, 60%. DD, during calendar year 2029, 65%. And EE, after December 31st, 2029, 70%. 4, in the case of any qualified battery component such as term is defined in section 45XC5A, which is sold. AA, during calendar year 2026, 60%. BB, during calendar year 2027, 65%. CC, during calendar year 2028, 70%. DD, during calendar year 2029, 80%, and EE, after December 31st, 2029, 85%, and 5, subject to clause 2 in the case of any applicable critical mineral as such term is defined in section 45XC6, which is sold. AA, after December 31st, 2025, and before January 1st, 2030, 0%. BB, during calendar year 2030, 25%. CC, during calendar year 2031, 30%. DD, during calendar year 2032, 40%. And EE, after December 31st, 2032, 50%. 2, adjusted threshold percentage for applicable critical minerals. Not later than December 31st, 2027, the Secretary shall issue threshold percentages for each of the applicable critical minerals described in section 45XC6, which shall 1, apply in lieu of the threshold percentage determined under clause 1.4 of each calendar year, 1.5 of each calendar year, and 2, equal or exceed the threshold percentage which would otherwise apply with respect to such applicable critical minerals under such clause for such calendar year, taking into account AA, domestic geographic ability, BB, supply chain constraints, CC, domestic processing capacity needs, and DD, national security concerns. D, materials assistance cost ratio. 1, qualified facilities and energy storage technology. For purposes of subparagraph A1, the term material assistance cost ratio means the amount expresses a percentage equal to the quotient of 1, an amount equal to AA, the total direct cost to the taxpayer attributable to all manufactured products, including components which are incorporated into the qualified facility or energy storage technology upon completion of construction, minus BB, the total direct cost to the taxpayer attributable to all manufactured products, including components which are AA, incorporated into the qualified facility or energy storage technology upon completion of construction, and BB, mined, produced, or manufactured by a foreign prohibited foreign entity divided by 537. 2, the amount described in subclause 1AA. 2, eligible components. For the purposes of subparagraph A, 2, the term material assistance cost ratio means the amount expressed as a percentage equal to the quotient of 1, an amount equal to AA with respect to an eligible component, the direct material costs that are paid or incurred within the meaning of Section 461 and any regulations issued under Section 263A by the taxpayer for production of such eligible component, minus BB with respect to an eligible component, the total direct material costs that are paid or incurred within the meaning of Section 461 and any regulations issued under Section 263A by the taxpayer for production of such eligible component that are attributable to a prohibited foreign entity, divided by 2, the amount described in subclause 1AA. 3, safe harbor tables. 1, in general, not later than December 31st, 2026, the Secretary shall issue safe harbor tables and such other guidance as deemed necessary. 2, AA, identify the percentage of total direct costs of any manufactured product which is attributable to a prohibited foreign entity. BB, identify the percentage of total direct material costs of any eligible component which is attributable to a prohibited foreign entity. And CC, provide all rules necessary to determine the amount of a taxpayer's material assistance from a prohibited foreign entity within the meaning of this paragraph. 2, safe harbor prior to issuance. For the purposes of this paragraph, prior to the date on which the Secretary issues the safe harbor tables described in subclause 1, and for the construction of qualified facility or energy storage technology which begins on or before the date, which is 60 days after the date of issuance of such tables, a taxpayer may, A, use the tables included in Internal Revenue Service Notice 2025-8 to establish the percentage of the total direct costs of any listed eligible component and any manufactured product, and BB, rely on a certification by the supplier of the manufactured product, eligible component, or constituent element, material, or subcomponent of an eligible component. AA, of the total direct cost of the total direct material cost as applicable of such product or component that was not produced or manufactured by a prohibited foreign entity, or BB, that such product or component was not produced or manufactured by a prohibited foreign entity. 3, exception, notwithstanding subclauses 1 and 2, AA, if the sub-taxpayer knows or has reason to know that a manufactured product or eligible component was produced or manufactured by a prohibited foreign entity, the taxpayer shall treat all direct costs with respect to such manufactured product or indirect material costs with respect to eligible components and attributable to a prohibited foreign entity. And BB, if the taxpayer knows or has reason to know that the certification referred to in Clause 2BB pertaining to a manufactured product or an eligible component is inaccurate, the taxpayer may not rely on such certification. 4, certification requirement. In a manner consistent with Treasury Regulation Section 1.45X 4C41 as in effect on the date of the enactment of this paragraph, the certification referred to in subclause 2BB shall AA, include AA, the supplier's employee identification number, or BB, any such similar identification number issued by a foreign government. BB, be signed under penalties of perjury. CC, be retained by the supplier and the taxpayer for a period of not less than 6 years, and shall be provided to the Secretary upon request. And DD, be from the supplier from which the taxpayer purchased any manufactured product, eligible component, or constituent elements, materials, or subcomponents of an eligible component, stating either AA, that such property was not produced or manufactured by a prohibited foreign entity, and that the supplier is not aware that any prior supplier in the chain of production of that property is a prohibited foreign entity. BB, for the purposes of Section 45X, the total direct material cost for such component, constituent element, material, or subcomponent that were not produced or manufactured by a prohibited entity, or CC, for purposes of Section 45Y or Section 48E, the total direct costs attributable to all manufactured products that were not produced or manufactured by a prohibited foreign entity. 4, existing contract. Upon the election of the taxpayer in such form and manner as the Secretary shall designate, in the case of any manufactured product, eligible component, or constituent element, material, or subcomponent of an eligible component, which is 1, acquired by the taxpayer or manufactured or assembled by or for the taxpayer pursuant to a binding written contract which was entered prior to June 16, 2025, and 2A, placed in service before January 1st, 2030, or in the case of an applicable facility as defined in Section 45Y D4B before January 1st, 2028, or BB, in the case of constituent element, material, or subcomponent used in a product sold before January 1st, 2030, the cost to the taxpayer with respect to such product, component, element, material, or subcomponent shall not be included for purposes of determining the material assistance cost ratio under this subparagraph. 5. Anti-circumvention rules. The Secretary shall prescribe such regulations and guidance as may be necessary or appropriate to prevent circumvention of the rules under this paragraph, including prevention of 1. Any abuse of the exception provided under Clause 4 under the stockpiling of any manufactured product, eligible component or constituent element, material or subcomponent of an eligible component during any period prior to the application of the requirements under the paragraph, or 2. Any evasion with respect to the requirements of the subparagraph where the facts and circumstances demonstrate the beginning of construction of a qualified facility or energy storage technology that has not, in fact, occurred. E. Other definitions. For purposes of this paragraph, 1. Eligible component. The term eligible component means 1. Any property described in Section 45XC1, or 2. Any component which is identified by the Secretary pursuant to regulations or guidance issued under subparagraph G. 2. Energy storage technology. The term energy storage technology has the same meaning given term under Section 48EC2. 3. Manufactured product. The term manufactured product means 1. A manufactured product which is a component of a qualified facility as described in Section 45Y G11B, and any guidance issue thereunder, or 2. Any product which is identified by the Secretary pursuant to regulations or guidance issued under subparagraph G. 4. Qualified facility. The term qualified facility means 1. A qualified facility is defined in Section 45YB1. 2. A qualified facility is defined in Section 48EB3. And 3. Any qualified interconnection property is defined in Section 48EB4, which is part of the qualified investment with respect to a qualified facility as described in Section 48EB1. F. Beginning of construction. Rules similar to the rules under paragraph 51J shall apply for purposes of this paragraph. G. Regulations and guidance. The Secretary may prescribe such regulations and guidance as may be necessary or appropriate to carry out the provisions of this paragraph, including 1. Identification of components or products for purposes of clauses, and 2. And for clauses 1 and 3 of subparagraph E, and 2. For purposes of subparagraph A2, rules to address facilities which produce more than one eligible component. D. Denial of credit for certain wind and solar leasing agreements. Section 45Y is amended by adding at the end the following new subsection. H. Denial of credit for wind and solar leasing agreements. No credit shall be determined under this section with respect to any production of electricity during the taxable year with respect to property described in paragraph 1 or 4 of Section 45D as applied by substituting lessee for taxpayer if the taxpayer rents or leases such property for a third party during such taxable year. E. Emissions rates table. Section 45YB2C is amended by adding at the following new clause. 3. Existing studies for purposes of Clause 1 in determining greenhouse gas emission rates for types or categories of facilities for the purposes of determining whether a facility satisfies the requirements under paragraph 1. The Secretary shall consider studies published on or before the date of enactment of this clause, which demonstrate a net life cycle greenhouse gas emissions rate, which is not greater than 0 using widely accepted life cycle assessment concepts, such as concepts described in standards developed by the International Organization for Standards. F. Nuclear energy communities. 1. In general, Section 45B11 is amended. A. In subparagraph B. 1 in clause 2.2 by striking or at the end. 2 in clause 3.2 by striking the period at the end, inserting comma or comma, and 3 by adding at the end of the following new clause. 4 for purposes of any qualified facility which is an advanced nuclear facility, a metropolitan statistical area which has or at any time during the period beginning after December 31st, 2009 had 0.17% or greater direct employment related to the advancement of nuclear power, including employment related to 1. An advanced nuclear facility. 2. Advanced nuclear power research and development. 3. Nuclear fuel cell cycle research, development, or production, including mining, enrichment, manufacture, storage, disposal, or recycling of nuclear fuel. And 4. The manufacturing or assembly of components used in an advanced nuclear facility. And B. By adding at the end following new subparagraph. C, advanced nuclear facilities. 1, in general, subject to clause 2 for purposes of subparagraph B4. The term advanced nuclear facility means any nuclear facility, the reactor design for which is approved in the manner described in section 45J D2. Special rule. For purposes of Clause 1, a facility shall be deemed to have a reactor design which is approved in the manner described in Section 45J D2 if the Nuclear Regulatory Commission has authorized construction and issued a site-specific construction permit or combined license with respect to such facility. 2, non-application for clean electricity investment credits, Section 48E3A1, is amended by inserting, as applied without regard to, Clause 4 thereof after Section 45B11B, G, conforming amendments. 1, paragraph 1 of Section 48DC is amended to read as follows. 1, is not a specified foreign entity as defined in Section 7701A51B, and 2, Section 45YB1 as is amended, A, by redesignating subparagraph D as subparagraph E, and B, inserting after subparagraph C the following new subparagraph. D, determination of capacity. For purposes of subparagraph C, additions of capacity of a facility shall be determined in any reasonable manner, including based on 1, determinations by or reports to the Federal Energy Regulatory Commission, including interconnection agreements, the Nuclear Regulatory Commission, or any similar entity reflecting additions of capacity. 2, determinations or reports reflected in additions or capacity made by an independent professional engineer. 3, reports to or issued by regional transmission organizations or independent system operators reflecting additions of capacity, or 4, any other method or manner provided by the Secretary. H, prohibition on transfer of credits to specified foreign entities. Section 6418G is amended by adding at the end of the following new paragraph. 5, prohibition on transfer of credits to specified foreign entities. With respect to any eligible credit described in Clause 3, 4, 6, 7, 8, or 11 of subsection F1A, an eligible taxpayer may not elect to transfer any portion of such credit to a taxpayer that is a specified foreign entity as defined in Section 7701A51B. 1, extension of period of limitations for errors relating to determining of material assistance from a prohibited foreign entity. Section 6501 is amended 1 by redesignating subsection O as subsection P, and 2 by inserting after subsection N the following new subsection. O, material assistance from a prohibited foreign entity. In the case of a deficiency attributable to an error with respect to the determination under Section 7701A52 for any taxable year, such deficiency may be assessed at any time within 6 years after the return of such year was filed. J, imposition of accuracy-related penalties. 1, in general, Section 6662 is amended by adding at the end the following new subsection. M, substantial understatement of income tax due to disallowance of applicable energy credits. 1, in general, in the case of a taxpayer which there is a disallowance of an applicable energy credit for any taxable year for purposes of determining whether there is a substantial understatement of income tax for such taxable year, subsection D1 shall be applied. A, in subparagraphs A and B by substituting 1% for 10% each place it appears, and B, without regard to subparagraph C, 2, disallowance of an applicable energy credit. For purposes of this subsection, the term disallowance of an applicable energy credit means a disallowance of a credit under Section 45X, 45Y, or 48E by reason of overstating the material assistance cost ratio as determined under Section 7701A52 with respect to any qualified facility, energy storage technology, or facility which produces eligible components. 2, conforming amendment. Section 6417D6 is amended by adding at the end the following new subparagraph. D, disallowance of an applicable energy credit. In the case of an applicable entity which made an election under subsection A with respect to an applicable credit for which there is a disallowance described in Section 6662M2 subparagraph A, shall apply with respect to any excessive payment resulting from such disallowance. K, penalty for substantial misstatements on certification provided by the supplier. 1. In general, Part 1 of Subchapter B of Chapter 68 is amended by inserting after Section 6695A the following new subsection. Section 6695B, penalty for substantial misstatements on certification provided by supplier. A, imposition of penalty if 1, a person A provides a certification described in Clause 3 to BB of Section 7701A 52D.
With respect to any manufactured product, eligible component, or constituent element, material, or subcomponent of an eligible component, and knows or reasonably should have known that the certification would be used in connection with a determination under such section. Such certification is inaccurate or false with respect to A, whether such property was produced or manufactured by a prohibited foreign entity, or B, the total direct costs or total direct material costs of such property that was not produced or manufactured by a prohibited foreign entity that were provided on such certification, and 3, the inaccuracy or falsity described in paragraph 2 resulted in the disallowance of an applicable energy credit as defined in section 6662 M2 and an understatement of income tax within the meaning of section 6662 D2 for the taxable year in an amount which exceeds the lesser of A, 5% of the tax required to be shown on the return for the taxable year, or B, $100,000. Then such person shall pay a penalty in the amount determined under subsection B. B, amount of penalty. The amount of the penalty imposed under subsection A on any person with respect to a certification shall be equal to the greater of 1, 10% of the amount of the underpayment as defined in section 6664A, solely attributable to the inaccuracy or falsity described in subsection A2, or 2, $5,000. C, exception. No penalties shall be imposed under subsection A if the person establishes to the satisfaction of the Secretary that any inaccuracy or falsity described in subsection A2 is due to a reasonable cause and not willful neglect. D, definitions. Any term used in this section, which is also used in section 7701A 52, shall have the meaning given in such term in such section. 2, clerical amendments. A, section 6696 is amended, 1, in the heading by striking and 6695A and inserting 6695A and 6695B. 2, in subsections A, B, and C by striking and 6695A, each place it appears, and inserting 6695A and 6695B. 3, in subsection C by striking or 6695A and inserting 6695A or 6695B. And 4, in subsection D, 1, in paragraph 1 by inserting or in the case of any penalty under section 6695B, 6 years, after assessed within 3 years. And 2, in paragraph 2 by inserting or in the case of any claim for refund of an overpayment of any penalty assessed under section 6695B, 6 years, after filed within 3 years. B, the table of sections for Part 1 of Subchapter B of Chapter 68 is amended by inserting, after item related to Section 6695A, the following new item, Section 6695B, penalty for substantial misstatements on certification provided by supplier. 1, excise tax on facilities that receive material assistance from prohibited foreign entities. 1, in general, Subtitle D is amended by adding at the end of the following new chapter, Chapter 50B, Material Assistance from Prohibited Foreign Entities, Section 5000E-1, Imposition of Tax, Section 5000E-1, Imposition of Tax. A, in general, in the case of an applicable facility for which there is a material assistance cost ratio violation, a tax is hereby imposed for the taxable year in which such facility is placed in service in the amount determined under subsection D with respect to such facility. B, applicable facility. For purposes of this section, the term applicable facility means a facility owned by the taxpayer, one which, A, uses wind to produce electricity, within the meaning of such term as used in Section 45D1, as determined without regard to any requirement under such section with respect to the date on which construction of property begins, or B, uses solar energy to produce electricity, within the meaning of such term as used in Section 45D4, as determined without regard to any requirement under such section with respect to the date on which construction of property begins, and 2, either A, the construction of which begins after the date of the enactment of this section and before January 1st, 2028, and which is placed in service after December 31st, 2027, or B, the construction of which begins after December 31st, 2027, and before January